Good morning, good morning, good morning. Wow, the first thing I see on the chat from AJ, who never ever makes it to the stream, is like, Krisha, are you gonna be on the stream too? AJ, that hurts my feelings, man. Hurts my feelings. Everyone wants Krisha. Well, tough luck. No Krisha for any of you today. Or maybe, or just maybe, she's gonna make a surprise guest appearance. We'll be beginning in around 8 minutes, perhaps a bit earlier than that actually. But while we wait, let me know if the music's a-okay, if the audio is a-okay, if I'm too loud, too soft, etc, etc, etc. That's fair, AJ. I'm just kidding, man. What I'm gonna do is I'm gonna try to do streams during the North American timings as well, beginning, I think, maybe Feb. But what I want to establish is a few regular seedlings who do show up on the North American streams or commit to show up, because it gets a bit lonely here without you guys, you know? One of the reasons I like streaming around this time is because Mock, Julian, Sherwin do show up. Mock isn't that important, but Murli has been showing up regularly too. Lindica, like we have some regulars who do show up. There have been times where I do streams at the North American timings, and there's like no seedlings who are on there. And I know that may sound biased and I'm picking favorites, but hey, I'm allowed to do that. I have favorites. Anyone from the Mango community, actually, or Mango Grow. Okay, how about this? If you guys are on Discord, right? Like Stan, for example. Man, I love it when Stan is on the stream as well. And he's not a seedling. But yeah, I'm just talking about nonsense now. Hey Sean, how's it going? Depeche, good morning, good morning, good morning. Yeah, I like seeing Depeche on here too, you know? Sherry! Cooking dinner, eh? What's cooking? I remember the first time I visited Australia, which was the only time, because COVID hit soon after. I was so excited to eat kangaroo, finally. We have a lot of family in Australia and New Zealand, and that was the big topic in every conversation. When does Sean finally get to eat his kangaroo? It's kind of hot in here today. Let's turn up the air conditioner. I can never get the air conditioner right. I'm either too hot or too cold. Krisha is my favorite. Sean Nevins, how's it going, buddy? 20k, eh? What do you guys think? 20k? You guys think 20k is coming? Prawan, how's it going, bud? Sam, how's it going? Not kangaroo, says Sherry. What's cooking then? Why is it such a secret? I want to know now. Zathan is in here too. The chat's a bit delayed, but the stream ain't. Okay, I put on my socks. Oh, that's so sweet of you to say, Sean. So Sean says, you two are both so awesome that anyone is lucky to be part of your fam. Believe it or not, at the beginning of our journey, when Kush and I embarked on this journey, we had a lot of pushback from the fam. We were the black sheep, so to speak. But now the tides have turned. Now we have family calling us from all around the world, from Texas, from NZ, from Australia, from Canada, asking us about how they could embark on this journey as well. And it's not just crypto, right? It's just about being independent, having the life that we have right now. Was that your kangaroo? Aussies eat kangaroo? Yeah, man. What, is that a surprise to you? They aren't just cute little animals that they look at. Australians, man. They make things count. No kangaroo shall go left uneaten. Oh man, Kusha and I made an audio track ourselves as well, but we never really got to. We were so lazy when pertaining to upgrading the channels. Yeah, it's safe to say, and I'm sure a lot of you guys know or have noticed, we don't put in as much effort as other channels do into our channel. Hey Lindica, you missed my face? I'm gonna get on camera very soon. Very soon for you. Just for you, Lindsay. Qantas, we don't reveal our location, but most people, especially old school Mongolians, know. But unfortunately, people don't know how to behave around Krisha, so we stopped talking about where we're located. It's not safe, especially in the crypto space. But you'll figure it out. It's not a big secret. Hey Mamba for life, how's it going, man? Good to see you in here. Ashok, I'm just scrolling. Zahir is in here today. Zahir, are you still in here, or have you left? They are on Crypto Island. Yeah. We're in the metaverse. Bitcoin citizenship. Oh wait, I wanna set up a few things that I want to talk about today. I started chatting with you guys and got distracted. God damn it! All right, give me a second, guys. I want to pull up a few things. Oh wait. I'm not. I need to use the washroom is what I need to do. Krisha, could you let the Discord know that we'll be beginning soon? All right, I think I have a couple of things ready now in case I do want to talk about things. All right. Hopefully we'll have a good stream today where we keep it a bit educational. A bit educational, you know, mango style. Just a tad bit. Uh, 20 hashtag quickly. Yeah, the countdown got reset, so I just bought myself 6 minutes more of time. Oh, is your new stuff like this, Sean? That's perfect, man. Alright, I am actually gonna go take a quick washroom break, and when I do get back, we will begin.
And what's cracking, you guys? Can you guys hear me?
My, oh my, oh my. Who is this who just hijacked the audio? Can you guys hear Krisha? Confirm if you guys can hear Krisha.
My mic is super low. I'm just gonna be, well, giving Sean the support he needs. And I'm also gonna be troubling him every now and then.
Oops,
because
apologies.
that's what I do best.
Was that loud?
No, you're good. You're good.
I think I'm gonna have to pour myself another drink.
Do you want me to come in and get you another drink?
I think I'll go grab one. You say hi to the Mango fam. They haven't heard you in a while, not live at least.
Oh yeah, it's been a while. Damn. Audio's well balanced on my end. Good to know, good to know. Sound is great. Yes, I'm here, Sorav. So quick question, how many of you guys actually caught the last Bitcoin video that Sean did? There were like some really interesting things going on there. A lot of interesting things that were said about, you know, the markets in general, the macro markets. I was kind of blown away by that one. Let's get targets on gold and silver. Man, I just looked at the gold chart and holy moly. How many of you guys have looked at the gold chart right now? It looks like it's about to break out. Finally. Julian says, yes, watched it. It was a really good video, caught it, brilliant. Man, it was really, really brilliant. Like, you guys didn't see us because we were not on camera, but my jaw just dropped because, I mean, we never really planned that one, so I was kind of in the same boat as you guys when Sean was explaining the whole thing, and I'm just like, whoa, I didn't think of that. There's just so much going on right now. Sean Nevins, man, you should watch it. Like, go and give that one a watch because that's like some serious insight right now. And that's something that's very rare, right? Insight. At least the insight that most people have, it's sort of regurgitated stuff out there and, you know, everyone's sort of in the same boat. But this was like super, super fresh. Peter Schiff will be insufferable now. Yeah. Peter Schiff. He's gonna capitalize on this one. Watch gold break out and Peter Schiff have his time in the sun. Oh, by the way, how many of you guys are keeping up with the Twitter drama? Twitter drama is pretty insane. Crypto Twitter drama. That's like my morning source of entertainment.
So what I miss? You guys talking about crypto Twitter drama?
Yeah, like today. Thing with Raul and Foss.
Oh, Foss? Oh.
Apparently Raul Paul only owns 1 Bitcoin, guys.
Oh,
I thought I was just like, whoa, the fact that like he said it, you know, on a public platform.
This ain't just like
so I asked him,
drama.
Sean,
This is like macro drama now coming on over to the crypto space, and that's bullish, by the way. That's so bullish. Like think about the underlying notion over there, right? We have macro drama coming on over to the crypto space, particularly the Bitcoin space. But that's huge, guys. That's huge. We should expand on that, Krisha, today.
I just asked them, by the way, about how many of them actually caught the last video that you posted, right? That our last duo where you spoke about the bond market and how that all sort of ties in. And quite a few of them liked it. Like even Lindeka just said, we watched it. We're hungry for more. So I think these are topics that we can sort of flesh out. I think it's going to be very important for the macro stage.
So that's a yes then for the Mango Macro channel that we've been discussing. By the way, I just switched on over to Cam. So with that, good morning, guys. My name is Sean Dexter and welcome you back to the Mango live stream. And today we do have a special guest, the gorgeous, the beautiful, the radio voice herself, Crash Talks. How's it going, Crash? She's laughing, but I can't hear you, Krisha.
He knows how to make me blush.
Krisha, you gotta stay close to the mic and not laugh away from the mic. Everyone wants to hear you laugh. That beautiful voice, especially when she's laughing, guys. She's the cutest, the love of my life. 10 years now running. She can't get rid of me. Hopefully, another 1,000 more years of block time.
1,000 more years.
It'll happen.
1,000.
It will happen. I think there's a 5% chance that we make some medical breakthrough that allows humanity to live 1,000 years. A 5% chance, which is it ain't high, but it's something. It's something. Oh, by the way, guys, cheers to all of you.
Oh, yeah,
Whiskey
cheers.
and Coke.
I mean, I'm raising my glass right now. I hope that you guys have your glasses too, even if there's water in there.
And
Hey,
don't
Tan
ask
is
me.
in here. Good morning.
Hey, Tan, how's it going, buddy? All right. Today I want to be a tad bit more organized than we usually are. In the past past 4 live streams, we've been talking about pretty much anything, and we digress a lot from the crypto markets. Not really, because everything connects. But today I want to be a tad bit more organized, and because there are important things I do want to talk about. Okay, the important things I think I need to explain to you guys in terms of how the Mango community, how the Mango community needs to be positioning themselves through a mindset perspective, for the long run, the short run, and the mid run, especially, right? You guys need to position your minds in a particular way. And then I want you guys to always remember the mango word of the year, which is discipline. And I want all of you guys to take a moment right now and ask yourselves, have you guys really been keeping discipline for the year? A lot of people make these New Year's resolutions that within the first 2 weeks of the year are forgotten. Okay, I'm not going to let any of you guys forget. I'm going to keep bringing it up to you guys. What did you guys ask yourselves to be disciplined on? Have you guys been disciplined on it? You don't need to be perfect. Okay, don't let your mistakes or like you erring away from the path deter you from getting back on the path. Okay, we're not perfect. None of us are perfect. It's about error correction. That's what price does too. So the markets are that, guys. The markets are error correction mechanisms, right? So that's what you need to be doing right now. Correct yourself and get back on path and get back onto the discipline path. With that out of the way, take a moment to ask yourselves if you guys have been disciplined while I organize myself and list down right here what I want to talk about. Okay, so definitely talk about Bitcoin's current price. We're going to be talking about Bitcoin's current price action and the key levels to be noting. Then we're going to be talking about long-term, short-term, and mid-term strategies. Okay, and understand how I've layered those, or rather listed those. Long-term, short-term, mid-term. Usually I say long-term, mid-term, short-term, right? But no, this time the mid-term is put at the back burner over here. Then I want to talk about gold, because people have been talking about gold recently, right? It was brought up by, what's his name, Mehta? I'm not sure if his name is Saurav or he keeps changing his name. So Saurav Mehta, are you the same dude on Discord? If you are, let me know. Okay, so we'll talk about gold. I'm going to talk about how it relates to Bitcoin, of course. And then we're going to talk about the bond market. And perhaps, Krisha, if you're still here, we can bring up the Greg Foss and Raul drama. Because in a way, that kind of relates, right?
Yeah, I think it does. I think it does. And more importantly, it's just about how to sift out I think that the approach we should take there is how to really sift out information that comes from these macro thinkers, because the way they play markets is very, very different from your average retailer.
Yeah, and that's essentially what,
right?
what Foss was
exactly.
saying.
So I think that's the angle.
We can get into probably a delicate topic where we can say, or we can position ourselves within each of those opposing forces, or rather each side of the debate, where Greg Foss is looking at the topic through his lens of being a guy who has kids, who has a family, living in Canada, seeing things crumble, right? While Raul, I'm not sure, correct me if I'm wrong, guys, but I don't think he has children, right? He's thinking about it through a pure trading perspective, right? There's no emotion attached to it whatsoever, which is the correct way, by the way. But we can talk about that too, and how that could change your view on how you want to put on positions, right? Having a principle versus trading without any principles, right? And what are your thoughts, Krisha? Should you trade with principles or without principles? You could share with the community. What are your thoughts on that?
I think with, because the principles ultimately, what do they define? They define your personality, right? That's where, at least that's how I am sort of thinking about it. And I think if you can play by that, right, that's your edge. Right? I'm not going to play through I'm not going to become a scalp trader. That's just not me, right? Principles also ultimately define who you are and define your personality. So always play to that. Now, if Raul is, say, a trader, he's playing through his strengths. If Greg Foss is a macro thinker and he is for the long run, he's looking to capture, those big freaking chunky ass moves in the market. Well, that's his edge, right? That's his personality, and that's just, they come from two different let's say, sides of that spectrum there.
So that's actually really interesting. Krisha is essentially pinpointing the fact that if you don't trade on your principles, you will be trading against your personality. while the more correct and elitist answer as a trader would be, hey, you got to keep your principles aside and trade the chart, right? Trade the TA, trade the trade, right? Basically, put on a position that is in line with the trade. That's easier said than done, right? It's easier for someone with no principles on the matter. I'm not saying no principles whatsoever. Someone with no principles on the matter can easily put on the trade because he has no psychological hurdles that are working against him to see the trade through. But if you do have principles on the matter, it's really hard psychologically to go against those principles, right? You're in conflict with yourself. So a lot of you need to consider that too when you are putting on your trades, and also consider that when you have other people on the other fence, on the other side of your trade, who aren't putting on that trade, right? Who aren't putting on the same trade as you are, because they're struggling to battle that inner feeling. So yeah, Krisha, good point there, because I was gonna say, guys, you gotta put your principles aside, but that's not easy. So that was a really good point.
Thanks. That was the whiskey and Coke there.
All right. So yeah, we'll talk about that. There's something else I do want to bring up, and it's a good thing I have this list over here because I'd likely forget. Someone messaged me and PM'd me from the seedling community, actually. Oh, sorry, I don't say seedling community. We're all one big community right here. From the seed program, someone within the seed program asked me about a Cardano trade that he/she wanted to put on. And I want to talk, I don't want to take any names here because it's a bit of a sensitive topic, of course, but I want to talk about that. I want to talk about that trade that he wanted to put on and why I was against he/she putting on that trade, and how it temporarily would have worked out for him, but from what I last checked, probably did not. So the Cardano psychology trade. So it's essentially long-term versus short-term trade, right? Long-term versus short-term. All right.
So you heard that, guys. We will be covering Cardano today. Woohoo!
I think we can cover that, Krisha, before we talk about gold and the bond market. I don't know how I'm gonna do this. I don't know because I wanna.
Yeah, I think we have a pretty decent Cardano fan base here. Cardano fans, raise your hands. Wow, that rhymed.
I think we should start with Cardano, but it just doesn't feel right. But
no. Start with Bitcoin. I say we cover the crypto first, and then we.
It just seems like it would be the best flow.
Yeah, I want to talk about Cardano because there was a hiccup from my end, and I was sort of really upset with myself in my read of the chart, of the Cardano chart. There was like a very important signature that I missed. I brought that up. I'm not sure if I posted on the C chat or the Grove chat, but I posted on one of the chats. And yeah, I think that'll be a very interesting chart to sort of dissect there.
Hiccup. That's interesting. You didn't tell me about this. So a lot of you guys think that Krisha, or a lot of you guys may think that Krisha and I may trade together and we put on our trades together, but that's only true for Bitcoin. When it comes to like altcoin trades, in fact, even short-term trades on Bitcoin, we don't trade together at all. Like, we tried doing that in the past, and that wasn't the best for our relationship. We have different personalities, okay, completely different personalities, and we locked horns. So we don't do that. So we put on our own trades, we have our own accounts, we have our own portfolios, etc. So it'll be interesting to know how Krisha's opinion, and you guys have seen how Krisha's opinion differs from mine, and her mistakes differ from my mistakes. We make different kinds of mistakes, and you guys need to, and this is, having Mango should be the perfect example, I guess is the right word, for lack of a better word, that you guys can't copy any trader, right? Even if you guys believe in the guy and believe that he has the right direction, etc. I mean, Krisha and I are completely in love with each other, and we still can't copy trade each other because we have different personalities, right? So you learn from someone you respect, but don't ever copy that person, because if you don't have the right personality, you're not going to be able to pull off the trade. Okay, so Krisha, with that, I'll switch on over to the charts. Right over here, I have Bitcoin. So we're going to start with Bitcoin, and I have a few levels drawn on my chart that is probably a refreshing picture for everyone else because they're so sick of seeing your messy charts.
Wow. Wow, you had to add that in there, right?
Had to. Everyone loves a Sean
Sean
Dexter
gets
chart.
anxiety attacks, guys. I want to know who else gets anxiety attacks looking at my chart. It's only Sean.
I'll show you guys
Sean
Kusha's chart.
comes to my
Kusha's
chart,
chart
yeah,
is like this. It's like lines everywhere. I can't even copy paste. Okay, it's not working. But Kusha's charts has just lines everywhere. It's everywhere. I'm just like, you
See,
want me
Sean
to
Evans is like your scribble king. That's right. That's right.
well, my scribbles are relatable, right? You guys can like, and my scribbles come true, by the way. More often than not, they come true.
If we could see them.
That's true. That's fair point, but fair point. All right. Okay, so you'll start with Bitcoin on the daily, which is, I would say, Kusha, the current state of matters, would you consider the daily a short-term time frame or a mid-term time frame?
Wait, say that again. Repeat your question.
With the current state of affairs, right, macro included, would you consider the daily time frame a short-term time frame or a mid-term time frame?
It's down short term.
Short-term, yeah, I agree. Okay, so we're going to start with the short-term time frames, and that really asks the rest of you the big question: should you be trading the 4-hour time frame and the 12-hour time frame? If Krisha and I both agree that the daily time frame is a short-term time frame, what does that make the 4-hour time frame, right? It makes that untradeable, so to speak. We'll talk about that too. Okay. The daily time frame at the moment, guys, these are the levels that I'm looking at. You guys see the white horizontals over here. I'll turn off the Ichimoku temporarily. We'll come back to this, but the white horizontals that you guys see on the chart, those are the key levels that we want Bitcoin to overcome before we have any trade on the daily to short to mid-term time frames, depending on how you guys want to position yourselves, right? I don't think there's a trade over here, primarily because of the macro influences. A lot of people have been comparing Bitcoin to this zone over here. Now, those of you who have been following Mango for a while know that we annihilated this area over here. Like, we traded this area really well. We nailed the price action. We knew what was going on. We actually took a trade very early long, and we were successful on that trade. This time around, even though I had a really good read in this area, I don't have a good read over here. Like, as a trader, you need to be able to step back and say, you know what, I just don't have any confidence in how to trade this, in which direction to trade this until XYZ happens, right? If X happens, I can do this and I'll have more confidence. If Y happens, I can do this and I'll have even more confidence. And if Z happens, I can do that. So what are our XYZs over here? Well, we have X on the 4,000-ish, 40-ish thousand level, 46,000 level right over here is our Y, and Z is our 53,000 level. Okay, so those are the three levels: X 40k, Y 46k, Z 53k. So, right, so until XYZ are overcome by the price action, you don't have confidence in what the market is actually doing. Does the market want to have a continuation of the trend, which would be X? Is the market exhausted temporarily and wants to go ahead and test Y? Right? And over here, we'll have contention between the bulls and the bears as to whether the bears want to actually hold price at this level, or will the bulls overcome and actually reclaim this level, right? So over here, we have multiple scenarios. We could either overcome Y and head on over to Z, or we could actually reject that Y and head back on over to X, and then maybe the bears have another try at this. Okay, so that's your Y play, which is an if this then that. And then finally you have Z, which is the big test for the bears. If the bulls can reclaim, so understand that if the bulls win at Y and push price to Z, the bulls are in the driver's seat, and then the bulls being able to reclaim Z without the bears pushing price back down is going to be a massive win for the bulls and a massive loss for the bears, right? So this is going to be the final test for the bears. Can they hold price down at 53k? At the moment, you want to look at the picture through the bear perspective because the trend on the daily time frame is down. Okay, the momentum play is X. Okay, the consolidation play is Y. Then we have another momentum play for the bulls after that at Z. You guys understand? Do you guys understand the way I frame this picture? It's a little bit different compared to how I usually frame things, but this is one of the ways I look at things a lot, and I want to push that forward to you guys so you guys can start looking at things this way as well. Any questions, Kusha?
No, sirree.
Okay.
We're pretty much on the same page as far as the momentum is concerned. I'm more interested in your thoughts of whether you think the sellers are exhausted in this region.
I'm conflicted. I'm really conflicted, and a huge reason for that is the interaction between the traditional markets and what's happening in Bitcoin, right? Also, big players entering the crypto space and their opinion and their stance on how they are positioning themselves in crypto. So a lot of that has me conflicted right now, and which is why I'm using price as a decision maker for me. And that's completely a-okay, guys. You need to be able to say, I don't have an opinion, I don't have a strong opinion, I don't have a tradable strong opinion. You don't need to always be in a trade, right? I want to have confirmation on my ideas, and I'll talk to you guys about my ideas today, right? And I'll say, these are the scenarios. For the scenarios to have confirmation, we're looking for this and that and that and this, right? Then we can put on a tradable trade, something that we can execute on. Having an analysis is literally only 25%. I would say 10% of the battle. You're going to see a lot of people on Twitter have these fucking, apologies, these effing crazy long-term logarithmic curve analysis. You're going to see them on YouTube as well, actually, but none of that is actually tradable, right? That's not tradable. So I want to talk to you guys about how you guys can put on trades, and if you guys should be putting on trades, and when to be putting on trades when they do trigger. So at the moment, we have XYZ. I'm not convinced that we have a trade over here, even though I was so convinced that we had a trade over here, right? When we did see the triggers as well, especially, there was a trade over here. At the moment, I'm struggling to be bearish, and I'm struggling also to be bullish. Through a TA perspective, I just can't be bearish over here. I just can't be bearish, not for any long-term trades, especially not for any long-term trades. On the midterm time frames, I think there are no trades whatsoever over here. No trades whatsoever. On the short term, there are trades. Okay, so that's the weirdest thing about this zone over here, guys, where you can put on trades in the short term, very easy trades on the lower time frames. I think right now the lower time frames are being rewarded the most because the trades have been so freaking easy that I've been collecting Bitcoin on the lower time frames. But in the mid time frames, I just don't see any tradable setups at all. On the higher time frames, I see massive opportunity. So that's why it's such a conflicting picture right now, because you're currently, if I had to put in columns where we have short term, mid term, and long term, I would say short term is bearish, very bearish, where you just freaking go hardcore on shorting every rally, and I've been doing that, and I've been rewarded for it. Midterm, like it's nothing. There's no trade. No trade. Long term is positive. Like you want only long trades on the long term, considering where we are sitting, right? And this is conflicting, right? Because the this short-term bearishness may very well cascade on over to the midterm, which will turn this into a negative as well. Sorry, the way I pictured this over here kind of makes it look like this is negative. This is not negative. This means neutral. This may actually lead to a cascading downside move on the midterms, and that would put pressure on the long term as well. But we're not there yet. We are in this really weird zone where we have short-term pressure towards the downside. Midterm has no trade, in my opinion. Long-term is still upside, right? Does that make sense? Any questions? Now is the time to be asking. These are really, really complex environments that you guys should be focused on, regardless of whether you trade, right? These environments, they're not easy to trade, but they're really good to learn, because when they come next time around, and they will come, guys, they will come, you'll be better prepared for it.
Yeah, I agree. This is the time where everybody is going to be sort of practicing with, institutional sort of traders as well, institutional retailers, not retailers, what am I saying? Institutional traders. So I think this is a good time. Sean, we had a very interesting conversation the other day in terms of market participants, how things have really changed compared to the last cycle, right? So that's another sort of factor, and that's what makes trading this entire range like super, super tricky right now. You're the participants, the market participants. So a lot of people have already left. A lot of retailers have already left. If you're looking at crypto fear and greed, we're sitting at extreme fear right now, right? You are playing with more sophisticated traders, right? And that's where textbook TA may not apply entirely. However, if you're looking to practice, trading the ranges and stuff, this is the time to be doing it. But of course, prudence is going to be key. Risk management, even more so. So
yeah,
that's one thing I feel like everyone's got to take note of. Like the market part, we're seeing it right now. The entire guys, just zoom out of your charts. You tell me, if you zoom out onto your weekly time frame, your monthly time frame, has the signature changed? Just ask yourself that question. Has the trend signature changed? And according to me, I think yes. Yes, it has, big time. And that is very, very reflective from just the market participants.
Yep. Exactly. Well said, Krisha. Well said. We can elaborate on that. Should we do it right now, or should we take a few questions from the chat?
No. Take a few questions. Let's enjoy. Let's sit back, sip on your drink, Sean.
Okay, so did you catch any good questions that I may have missed? I see one over here from Ali Yakub.
Okay,
This is a very simple question. Like, are you shorting right now? But the answer is not simple. The answer is I am short on the short-term time frames. I'm taking short trades on the short-term time frames, and the way I'm doing it is essentially I'm putting on credit spreads by selling the short duration calls with protection. Of course, they are not naked calls, and I have midterm. I have a midterm protection trade against volatility, right? So as long as there's volatility, it's more for protection trade in that if markets dump really, really hard towards the downside, I will be protected. If markets pump really, really hard towards the upside, I will be protected. And those credit spreads are essentially paying for that trade, right? Because that trade is essentially costing me money every single day that passes by, right? I'm burning money on that trade. I will lose on that trade, right? If markets simply go sideways like this without actually breaking this range, right? So that's why my spreads are paying for that trade. And in terms of the long term, so I'm essentially doing this, guys. I'm trading this, what I have over here, what I've listed for you guys. I'm trading bearish towards the downside in the short term, right? On the midterm, I have protection, and on the long term, I am long, right? Long term, I'm long. And the reason for that, guys, is, and you cannot ignore this. None of you should be ignoring this. None of you should be ignoring this. Very, very simple. We all have access to this template over here. Ichimoku, right over here, guys. We are literally on the freaking Tenkin, okay? We are on the monthly Tenkin, and you don't want to be trading against this, in my opinion. I said the same thing over here over here, that was enough reason to, in fact, I've scribbled on it already. That was enough reason for me to go long, okay, back then. This time around, even though this sits in line with our thesis, okay, and I'm going to end up regretting it, I'm so sure, and I'll talk about that why, but around this time, when we broke this region over here, guys, in October, okay, this was months ago, we had postulated different scenarios, and one of the scenarios that we talked about was a failed breakout, right? A failure to continue on to the upside, which was my preferred scenario, and I'm remembering that, and that's why these videos help me too. I talked to you guys about, hey, if we fail to break out and we break back into the range, right? Let me just delete everything here. I want to, this is really important, so give me a second. Delete all my scribbles. Jesus, I scribbled a lot. Okay, yeah. So if we fail to break out, I talked about if we fail to break out, guys, then there's a very strong likelihood that we put in a nice, beautiful ascending triangle leading into June, and then we break out after June, which goes contrary to everyone's analysis of Bitcoin reaching 100K by June. Was one of the analysis, latest by June, right? And then someone else was like, Bitcoin 100K by December. That one's of course failed. But imagine Bitcoin doing it after both of those time trades, right? We don't want to be trading against time ever, guys, ever. As soon as you see a community putting a timeline on something, you can almost certainly counter trade that. That's one of the things I've learned from all of my readings. But yeah, we did see the failed breakout, and now we have come back to test this Tenkin. The Tenkin has come perfectly in line with that analysis as well, which I did not talk about or foresee, and it has. So we have confluence with that analysis in that we might be putting in a massive ascending triangle. The thing about trading this on leverage, though, is that this is the monthly time frame, and the monthly could come down wick on over to the Kijun, which is currently sitting at around 34,000-ish, may even come all the way down here while holding this low at 28,000 and close above the Tenkin 21 EMA and Kijun. Let's go ahead and put that up. So as long as the monthly closes above this region over here of the 21 EMA, Tenkin, and the Kijun, let me put that up for you guys, we are fine, right? The monthly is fine. But that doesn't preclude the monthly wicking down all the way up to 28K, right? Without being wrong. Now, if the monthly does do that, you may get liquidated out of your leverage trades, which is why the way I trade this now is spot, right? I trade spot long term, right? Long leverage on my short term trades, which are much bigger positions, and on the midterm, of course, I have an insurance trade that is up. So that's a little bit more of a complex setup to answer your question. Of course, when are you wrong long term on your trade? If we close a monthly Kijun underneath 34,000, in which case Krisha is actually going to be an aggressive buyer on her side of things, but I'll let her speak on that in a different video. But any questions on that, guys?
I got my bids lined up.
How do I customize my Ichimoku? It's just 20, 60, 30, 120. Those are the inputs that you put in. You just adjust it for crypto settings and then you double it.
Nikhil, I'm right here, man. Today I've joined in on voice. Let's see what people. Oh, by the way, Mock the Bot is in here.
Ooh, nice.
Our manga bot. Our manga bot is in here.
Sean Nevin says definitely macro bullish, but we are in some strange times. And the reason we are in strange times is particularly with what's going on with the entire, what's the term I look for? The hype, the nervousness over what the Fed wants to do with the bond market, with the interest rates. And we can go ahead and talk about that, I guess, because that does line up with with the entire drama between Raul and Greg Foss as well. So that's really interesting, though. That's really interesting. So Raul is essentially was postulating a long bond trade, right? I wonder why. I don't know. I haven't watched Raul's video or Raul's snippet or whatever. I'm not sure where he discussed that, but I'll watch it after the stream. I'll give you guys my thoughts though on what's going on over there and why it impacts the market so heavily. I already went on a massive rant, on a impromptu rant in a video that I did with Krisha. If you guys haven't watched that, I really recommend you guys do watch that, so you guys get a better idea of how all of these things interrelate with the with the crypto markets. I meant to pull up the Mango dashboard over there. That way we get a good base, but don't have the Mango dashboard up. This should do it. Okay, you guys do.
You guys should totally catch that video, by the way. Like, that was easily one of the best videos of, well, I don't know, the past 6 months. Like, I learned so much from it. Now, we're always together, Sean and I, and we're always sort of dispensing, information on each other. But that was sort of that. I mean, I was just left in awe right there. So go ahead and give that video a watch. That's going to give you, like, by the way, massive insight and massive edge leading up to the next couple of quarters.
Yeah, especially the next 6 months, right? That video is probably the most important Mango video that you guys can watch for the next 6 months, pertaining to the next 6 months, on how you position yourself on altcoins, on your Bitcoin, etc., etc. In fact, that is the reason why I wasn't bullish on a continuation move on Cardano. And what do you know, guys? I ended up being right. Kusha, do you remember that? I talked about that in the Cardano video that we did together, the duo video.
Yes, sirree. And I was sort of leaning bullish, and that's where I messed up, right? So that's why I wanted to talk about Cardano, to tell you guys where I messed up at. Like, it was such a big sort of oversight from my part, and I was really disappointed. I'm just like, how the hell did I miss that? Like, how did I miss that? Especially after going through the seed program and, rewatching some of the modules. It's just that. By the way, seedlings, you guys should be rewatching some of the stuff, because you'll be surprised as to how many mental models you can lose if you get too fixated on, say, one strategy, right? So go ahead, and if you have to watch the modules over again, do so. Trust me, it's going to be super, super helpful in really identifying different things happening in the market. Now, that's something that happened with me and Cardano the other day, and
so this was a TA mistake, or was it
yeah, it was a TA mistake, but more so like, I mean, what is TA? It's analysis, it's technical analysis. You're looking at price action, and sometimes price action gives you signatures, right? And if you miss the signature, even though you know what's happening, that's the thing, right? Like, you went over it in the program, and I should have caught it, and I completely missed the signature, and that costed me. So I took a loss on Cardano. It was a quick loss, but I was really upset at myself that I did not catch that. I should have seen that coming. Now, you probably got it really intuitively because of the mental model. I mean, you created the program, right? So because of that mental model right there, you sort of understood that, and perhaps, that helped you say that, you know what, I'm not going to be trading Cardano here. But I jumped into the trade.
Okay, so let's talk about that. Let's talk about Cardano. I just pulled up Cardano. We're gonna go off script over here, because I think this would kind of allow us to lean into why it's so important to understand the macro picture, because I think people discount that way too much, and the crypto market has gotten far too much attention now from institutional players for people to ignore institutional action, right? So let's start with Cardano. Let's start with I switched over to the Cardano chart over here, Kusha. I am looking at the daily time frame. I'm not sure what time frame you are playing, but let's go with because this will allow me to talk about the other topic I want to talk about, where one of the seedlings messaged me, and I recommended he stay away from the trade temporarily at the very least. And yeah, let's do it. We'll go off script a little bit and then come back to Bitcoin and the bond market. Let's do it. So where do we start? What are we looking at? And what was your initial idea? What went wrong, etc.? Tell us. So I can't hear you, Kusha. I'm not sure if you're speaking. You're probably...
Okay, there we go. Okay, I'm right here.
Okay.
So I was looking at the 2-day time frame, right? That's where I sort of base my thesis off of, the 2-day time frame. I'm like, you know what? Cardano's looking super strong here. I also looked at the last daily close, and we had a spectacular daily close, right? If you
Okay,
guys
so
remember it, for those of you looking at Cardano.
Hold up. You're going too fast. Am I looking at the daily or the 2-day time frame?
Okay, right now you're looking at the 2-day time frame.
Okay, so I switched to the 2-day time frame. Okay, let's go.
Right. So now now these are really, really good lessons you can learn from me. Don't pull a Krisha. So I was looking at the resistance at $1.47, right? And I noticed that I'm like, okay, you know what? I'm looking for Cardano to close over $1.47 to really start getting the entire position of my, of the trade that I wanted to get in, the position at the very least. And so the thing is that I didn't wait on the close properly. I went on over to the daily, right? And I noticed that the daily had an extremely, like, it had such a great close. And I'm like, all right, you know what I'm going to do? I'm going to get it on the retest of the breakout point. And I did. I think I got the trade at around $1.53 or $1.51, something like that. That's where I sort of positioned. But what I failed to do, now I was so excited about that trade and really getting it in because Cardano was looking so super there. I failed to sort of zoom out, right? I failed to look at the signature because I got too caught up in the excitement of the current move that was playing out in front of me. And if you just zoom out, all of you guys, just get onto Cardano USD, zoom out of your charts, right? You'll notice that, and this was such a classic signature. Cardano has done this before. This was a liquidity hunt.
Oh,
and this comes right out of your
yeah.
institutional order flow module, like right from it. Like, this is such a classic mistake. And I fell victim to it in spite, of just knowing. And that's why I felt really, really stupid, because if you get on over to the daily time frame, zoom out of the entire picture, this has happened once before.
Yeah.
And that's why sometimes now I should have followed my own freaking advice here. Wait on that candle close. Sometimes you feel like you're not going to catch that bid. But more often than not, especially if you're trading to the upside in a macro downtrend across the board, there's a very, 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 very good chance that you catch your bid on support that you intend to catch it on a better level that is easy for you to manage your trade off of.
So Kusha, I think
right?
you're going way too fast for people to follow you, and this should give you guys a little bit of appreciation to Krisha's daily videos that she does put up, because if you do let her mind run wild, she can go really fast. But she puts in a lot of effort to making sure that she lays it all out for you guys in a very simple and in a way that you guys can understand. Because she knows that you guys get frustrated with my explanations where I just run all over the place. But she has a similar mind. So Kusha,
it's just running fast.
Yeah, slow down for them. And okay. I'll tell you guys my interpretation of what's going on so far. I had a whoa moment at the moment here, right now here, because I drew in these horizontals based off the daily and the 2-day time frame, and I marked out this zone, and I'm like, oh man, this lines up with one of the charts, or rather the chart that Kush and I were we were doing a duo analysis on the most recent Cardano video, right? And she had a zone there. I'm like, damn, that zone works out really, really well. Cardano's playing off it really well. So I marked it out over here, and now I see everything that she's talking about, right? She's talking about this zone over here, guys, between $1.47 and $1.43. The 2-day time frame is the $1.43 region. It's the higher level, right, that we didn't close above. But the daily level is at $1.47. So that zone, if you look at the daily time frame, you can see that we closed above the zone. But on the 2-day, we have not. And now, Candice, this, if you're still in the chat and on the live stream, this kind of lines up with the question you asked me over PM, right? In regards to formulating your thesis. Flip it around. What if you had traded this by essentially entering or exiting on the lower time frame, right? You would have essentially gotten shook into a trade, or you would have got shook out of a good trade, depending on whether you're bearish or bullish. So use this as an example, Candice, to ask yourself, do you really want to be using the lower time frames to make your decisions if your trade entry was on the higher time frames, right? So Krisha basically used it to get into a trade, but this applies to getting out of a trade as well, right? You could be shook into a bad position. So Krisha essentially is talking about this region over here where it ended up being a liquidity hunt. Krisha, you're talking about this wick high over here above the wick high of 156, right?
Right.
And we basically took in all that liquidity. And this is why, guys, higher time frames and candle closes will protect you from liquidity hunts. I say it all the time, but people don't really feel it until they go through it. So Krisha can elaborate a little bit on that now.
You probably understood that like really intuitively. Like I noticed that Sean sort of catches on to things so like, you know, nonchalantly, like it's a non-factor, because he sort of understands that it happens very subconsciously, right? And that's the thing about trading, guys. The more you do it, the more you practice. This is, by the way, this is the time everyone
you get
ought to be
wrecked.
practicing and learning. Yeah, and it's so you sort of understood that subconsciously, and that's why we were on opposite sides of this one, right? Like I was so for the trade, and Sean was just like, no, I don't know. You know, I think
I was
Cardano
hesitant.
still has some more to go. Yeah, you were really hesitant there. So
on the live,
yeah,
on
I mean,
the
that
on
was
the
clear,
duo.
guys. Look at that. Look at the liquidity hunts on this, right? So what they really do? Okay, so this was a bull trap, right? They take price up.
Yeah.
They essentially take out the previous wick high. Notice how it happened on both times. Take out the wick high, essentially grabbing a whole lot of liquidity there and then bringing it back down.
Yep. Murli says, perfect example of the scenarios discussed in the order flow module. Thanks for sharing, Krisha. Yeah, this is really a really good example of the things we talk about, the complex topics that we talk about in the C program, the order flow module particularly. So those of you who are on the C program and you guys have forgotten those concepts, rewatch those modules and apply it. Like use this scenario right over here, and you'll have your alleluia moments. You're like, oh shit, your aha moments. So if you guys go back to the Cardano video, right, the duo that Kush and I did, you guys will remember that moment where I said, let's wait to see if the daily gets sold into. Remember, that was the phrase I used, right? That was the exact sentence I used. And that's exactly, and I'm talking to you guys in the C program, particularly, I'm talking to you guys deliberately over here and saying, line up that phrase with what we talk about in the C program. You guys will know why I say that. Now, for those of you who are watching just on YouTube, right, and don't have any context with the order flow module, you guys really don't need the order flow module, because what you guys should have taken from that was, let's wait for the daily to close. Let's see if this daily gets sold into. And what happened was we did get sold into, right? And that gave me my clue, or that gave me my confirmation that, yeah, you know what? I'm still staying away from this. And Krisha's talking about this region over here. When Krisha talks about signatures, she's really good at identifying signatures. I'm not, right? Which is why you guys don't hear me talk about fractals. She's talking about this over here at around, Krisha, if I understand correctly, let me know if I'm wrong. Are you talking about the $2.30 region to the $2.40 region where we took out that liquidity as well and they got sold into?
Yes, sirree.
That's that region, right? If I remember correctly, that probably lined up with that lined up with the big weekly dynamic liquidity hunt that also, yeah. Do you guys remember this? Chauvin and Monk probably remember this. That was the region that made me bearish on Cardano not holding the weekly dynamic, because we were so bullish on the weekly dynamic for so long, ever since this region over here, right? We were bullish, and we said as long as the weekly dynamic is holding, we are going to stay bullish and it's going to be an accumulation area. But over here, when we came down to this region over here on Cardano, right, every weekly candle, even though it was holding and getting picked up, was closing red. That bearish action was so evident, so apparent. Then we had the pump. Everyone got excited, and even on that stream I said, guys, let's see if we can hold the op line on the dynamic, right? This dot over here, which at the time was sitting at around $2.24, let's see if it holds. If we can close above that, I'll get bullish. I'll put on my Cardano position again and I'll take it to the upside. But we didn't. We got sold into over there, and the very next candle, for the first time in freaking months, and probably a year maybe. November? November, a year. The first time in 1 year, we lost the weekly dynamic. That's when I got bearish for what? For what level? The bi-weekly dynamic, right? And that's where we bounced off. It's TA, guys. TA at the end of the day dictates everything, but you use these holistic ideas, these fundamental market dynamics. These are market dynamics, guys. Order flow, liquidity hunts. These are market dynamics to give you that extra edge. But yeah, Kusha, really good example for everyone to use to error correct themselves. So yeah, any further thoughts that you'd want to give them? Any pain points that you went through, like that you could share with them? Because the best thing with the Mango community is, go on.
Yeah, go on. The best thing about the Mango community
is that we don't learn from our successes, from each other's successes. We learn more from each other's pain, right? We all go through pain. We can talk about that pain, and if you can let them know the pain you went through, they may not have to go through that pain.
Okay, so I think one thing that I'm sure everyone can resonate with is when you're waiting. Now, we're always telling you to wait on candle close, right? But in that interim, sometimes the coin that you're looking at probably pumps and
Yeah.
pumps like quite a bit in your face while you're sitting there waiting for candle close. How many of you have felt this sort of anxiety over it? I'm curious. How many of you have felt it? And wondering, should I just jump in? Oh man, price is up 5%, or price is up 10%. Should I jump in now? Should I wait? Should I wait on a candle close?
Yeah.
How many of you have felt that that sort
Junior's
of
like
feeling?
me. I go through it up to till today, till this day, up to this day, I go through it. You it can't not bother you, man. Everyone goes through it. As seasoned as you are, those candles are designed to target your emotion. That's what you got to tell yourself. Like, I know what you're doing. I know what you're doing. You're good. You're good. You're trying to get my money. Good job. But you're not getting me. You're not getting me. So that's what you gotta. That's what you guys gotta say until you get that confirmation. In which case, it could be the guys who are drawing in the liquidity, right? You know what people don't understand? That they think that these institutional investors and these market movers, they control the market and they're always right and they're always going to win. No, that's not true at all. There are going to be times where they cause these moves to get their liquidity hunts and to tap into the stop losses, and they sell and they feel like they're geniuses. Ha ha ha! Screw these freaking noobs. But then the market just keeps going, and the market runs away from them, and the market goes and goes and goes and goes, and they are the ones who are trapped out of the trade, and they are the ones who are like, holy shit, we got to get back into this, and they end up buying back higher. And how do you know? How do you really know if they will feel those kind of feelings? Like, institutional investors at the end of the day are human beings. They are all human beings. They make the same mistakes as we do. The only difference is that they have 100x more buying power than all of us, right? They basically apply their buying power and their selling power to get to your emotions. But sometimes that ends up going up against other institutional investors who are doing the opposite, who are saying, thank you very much, I'll take all of that and I'll buy even more. Michael Saylor could very well come in and say, you know what, I'm going to buy all this Cardano. It sounds so ridiculous for me to say, apologies. But he may say that, and price may just keep going after that, right? And then there are other people chasing bigger bags, chasing a higher price, and that's good for you. So how do you know, though? How do you know that they're going through those emotions? When candles close above key levels, because what that tells you is that the market has accepted price at that level. The big players has accepted price at that level. Does that make sense, Kusha?
Yes, and here's a tip. Okay, now this I learned from trading over the cycles. If now this was my mistake, right? we're seeing that Cardano and every other damn chart out there, it's all in a downtrend. For Christ's sake, it's in a downtrend. Right now, I am trading to the upside. My position is a long position. Right? I am essentially fighting against the macro trend. If you find that your position is against the macro trend, there is a good chance that you get a better bid on that trade.
Yeah.
Right? And that's something that I messed up on. I should have understood that. I should have known that, and I should have understood that the sort of the edge was on my side for getting a better bid. So assess the macro trend and understand what's your edge against the macro trend, right? Are you looking for that pullback? There's a good freaking chance that you get a pullback when the macro trend is a downtrend.
Yeah, I still
So
make
that's
a
the
mistake.
first thing. And there was another question. I think who asked that? Someone asked me, Krisha, how did you handle getting out of the position or something along that vein? So the way I did that was essentially I looked at, so I mean I got into the trade before I should have, but the very next candle was the 2-day close, and the entire premise was hoping that Cardano would actually close over that region of resistance that I was looking at, which came in at, what was that again? $1.47, right? But instead Cardano lost it, so it was a pretty like quick. I managed to sort of, rid myself of the pain very, very quickly. So as soon as it closed, I just got out of the position.
I'm gonna read out what I PM. Oh, Philippe is PMing. Philippe, I see you typing to me. I'm gonna read out what I said to Candace. I said, and Candace, by the way, I know you're new to the C program, but I urge you to start posting these thoughts on the actual seed chat, so that way you get the beehive influence of all the seedlings helping you out, because there are a lot of people in there who are much smarter than I am that can help you out. So don't hesitate. But I'm gonna say, I'm gonna read out this a little bit. I said, wait, I want to find the right part. Okay. Yes, you can use the lower time frames to exit, but if you're going to be making the trade off of the lower time frames, make sure that you do it. Make sure you make this decision before you put on the actual trade, and not after. So what Krisha did over here, and Krisha, you can correct me if I'm wrong because I'm not completely familiar with your trade. I think you made the decision to get into the trade based on the lower time frames after your thesis, correct?
Yes. I mean, by the Lord, yes. Yeah.
Right, because you got on the daily time frame base, right?
Yeah.
So that's completely fine, by the way, guys. And I want to emphasize that. It's not wrong to do that. It's not wrong to do that. You know when it's not wrong to do that? It's not wrong to do that if that was your plan. If you say, I am going to get in on the daily time frame based on this 2-day zone, if you say that before it happens, it's okay. It is okay, because that was your plan, right? You are not wrong to follow your plan ever. You may be wrong in the trade and you can just get out, right? But if it wasn't your plan, you shouldn't do it, right? Okay, so you can say, I'm going to get on, I'm going to get into this trend, even though it's on the weekly time frame, the trend, I'm going to get in on a 12-hour candle close. You could say that, but you need to be willing to accept getting chopped. Okay, because that is essentially the trade-off you're making. You're like, I want to get in early because I don't want this trade to run away from me, and the trade-off over there of getting early is the risk of getting chopped, right? And that's essentially what you need to accept, and that's what happened in this area over here. It was a chop, right? It basically drew in liquidity and chopped back down. Is that fair to say, Krisha?
Yes, sirree. I think so. I think that's a good sort of breakdown of it.
All right.
Let us know if you guys have any questions on this. I know this is like heavy TA stuff. Some of you guys are here for the macro, which is really, really good to know. I think the macro is where the edge is at right now, by the way. Everyone should have their eyes on that. But if there's any questions that you guys have on the TA part of things, just let us know in the chat.
Okay. So macro, then we should probably talk about that, and this can kind of probably line up with The drama between Kusha. Could you send me a link to the thread between Foss
Okay, here.
and
I think I did.
Raul?
1 second. Let me just double check.
Meantime,
I'm always keeping up with Twitter drama, guys. Every morning, it's a very diligent part of my routine because
yeah,
there's always something. So even who was it? The CEO of Strike. Why am I forgetting his name, Sean?
Jack
Help me
Morris.
out here.
Jack Morris.
Yes. So he recently had like this Twitter thing where he's gone on and he was just at an airport waiting for it to board his flight. And he was basically just giving away free tips to everyone to tell him, basically anyone who would tell him why, this was Bitcoin was so special and the whole thing of Lightning Network. So even if it was like a one-liner and you just post your QR code for your wallet, he would essentially just send tips to everyone. And he just did that while he was just waiting at the airport, which I thought was super, super cool. I'm like, first when I saw that tweet, I'm just like, is this a scam? But no, it turns out it was him just being cool. And then there was the thing of Greg Foss and Raoul Paul, and I found that very entertaining too. Okay, I've already sent it to you on PM, Sean. Just check your
Okay.
PM, and you'll see the tweet from Raoul.
Okay, I see it too. Okay.
I like Greg Foss. I think he's like super abrasive, but he makes a lot of sense. Everything is like math. It's all math, guys. Just simple math.
It's just bond math. That's what he said. It's bond math.
Just math. It's like that's always like his end line. It's
Do you guys
just
want?
simple math.
Do you guys want to talk about some bond math today? I think I'll bore you guys. Okay, wait. Let me.
Julian, I'm a bit biased towards Foss because, well, he's also Canadian.
He's Canadian.
Yeah, he's
and
Canadian.
he has the same.
That Canadians don't deserve.
Yeah, he's
Like
he's the
this guy,
Canadian.
he's
He's
so
the hero
Canadian,
we
but
don't
no
deserve. He's the Batman of Canada.
Usually Canadians, like they're really polite. Canadians are very polite. I mean, I could be opening the door for you and I would be saying thank you to you. You know, shit like that.
This was Kushan. Was it with you? I think we were in Vancouver and these Americans were walking by and they were talking to each other. It was like mom and son talking to each other. The guy was probably like in his late 20s and the mother was probably in her 40s. I don't know. But they were looking at each other while talking and not looking at the road. And they ran into this Canadian couple. They just like walked right into them, right? And they were pretty big. And the Canadian couple apologizes to them, okay? And the they're like, oh, we're so sorry. Even though the Canadian couple, I remember seeing Kushan and I was sitting on a bench, and I remember seeing this so clearly. They were trying to avoid them. These two Americans were just like, no F's given whatsoever. We own the world. We are the ruling empire. Screw all of you. And they just ran into them. And the Canadian couple apologizes to them. And the mother and the son were so flabbergasted by the situation. And they were just like, oh, I'm so sorry. They're actually making fun. After the Canadians walked away, they were making fun of the Canadians. But like, can you believe that? They apologized to us. And the mother was like, yeah, I know, right?
They were so thoroughly amused by the entire thing, and we were just amused bystanders there, just looking at the entire situation play out. I'm like, Sean, are we like them? Tell me we're not like this. Tell me we're not thanking people for bumping into us.
No, but
although, I mean, I've done that before. It's just a part of the culture. You just sort of pick it up. Now it's just like normal reflex words that just come out of your mouth. Thank you. You're welcome. It's just stuff that just happens. And Greg Foss is not like that. That's the thing with Greg, right? He just says random stuff. Are you pulling up the tweet?
Yeah, I'm trying to do that right now. So give me a second, guys.
Pure humanity. That's right. Welcome to Canada.
So this is the Michael Jackson gif watching the drama. Okay. So Greg Foss started with Raul sucks and blows. Wow, that's pretty. That's how you start off the conversation. Raul sucks and blows. Hashtag Bitcoin. I mean, okay. So then some random dude, I guess, Christian Wolf says, "Oh man, I really like Raul GMI and the way he explains things. Maybe Greg gone long on Steam Whistle tonight." And Foss says, "No, I'm just calling out on the bullshit." So Raul replies now, "Which bullshit is that specifically, Greg? I can be rightfully accused of many terrible things, but it's nice to know what exactly." That was a really good response. So this is the drama right here, guys. So basically, Greg Foss came out of nowhere, at least through my eyes, and because I don't know what he's talking about. I haven't seen the interview just yet, but he says Raul sucks and blows, and Raul was like, whoa, 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 where's this coming from? And he says, "Which bullshit are you talking about, Greg? Because I'd like to know." And then if I scroll down over here, it wait, what? Kush, how do I see the entire thread? Is this show more replies? Where's the entire thread, Krisha? Because I'm seeing like Dan held and stuff.
You scroll into the thread.
Into Raul's, it's into Raul's thread. I'll just go
Here,
into
let me
Raul's
look.
tweet and replies, I guess.
Like this, by the way, and this is going to be important, guys. Just to let you guys know, because you're going to find a lot of noise out there, right? So it's knowing how to understand what to filter out.
I got it right here. Okay, you sent me the wrong thread. Okay, so I got it here. So Raul says, "Which BS specifically, Greg? I can rightfully be accused, blah, blah, blah." And then Greg replies to him, says, "Your thoughts on inflation and bonds as a trading vehicle. The world is not set up to trade like you. Please don't promote that ability when few understand bond math. Fiat's debased with 100% certainty. Thank you for responding. Hashtag Bitcoin." Raul says, okay. Let's do the math here. If I'm right and bonds do rally, they can rally 20% in 1 year. Just use TLT. That is faster than the balance sheet can expand. Okay. So Raul is saying that essentially, if bonds rally, they will rally faster than the balance sheet is likely to expand. Keyword there, likely to expand this year. And I think he's right on that. If bonds do rally, though, and I don't think that is a certainty just yet, right? There's no trigger for. Okay, so I'll come back to that. But he goes on to say, thus it's a net win to your purchasing power, which he's right on again. So one, he's right that the balance sheet is likely, based on the current scenario, likely going to not expand as much as the bond market can rally. He's right on that. If you hold bonds to maturity, you lose. Issue. Okay. So then he goes on to say, and that's the sentence that people might be getting confused on. He goes on to agree with Greg Foss in this little sentence over here. He says, if you do hold bonds to maturity, you will lose. You will lose. So what he's saying in this tweet over here, in this little tweet, okay, in these few sentences, there's a lot to unpack. He's like, there's a trade to be had on the bond market. If the bond market rallies, right, you can trade the bond market on a 1 year time frame because it is it is very likely to outperform the balance sheet expansion of the Fed, right? So basically, the Fed's balance sheet is likely to underperform the bond market increase. So he's right over there. So and then he says issue ? And honestly, you can't argue with that. And then Greg Foss goes on to say real yields, real CPI, certainty that the Fed debasement over the contract trade / hold period. So Greg Foss is essentially saying, if I had to like fully encapsulate all the messages, Greg is saying bonds are getting screwed. Bonds, there's no trade on the bond on the bond whatsoever. You're giving bad advice. You're giving financially imprudent advice because the bond market is going to zero. And Raul is saying, yes, I agree with you that the bond market is going to zero, but in the short term, there is a trade to be had. And I want you guys to really appreciate something else that's going on over here that people are probably not appreciating. And I'm going to use my trading view over here. We have the bond market here, so this is good. So these guys are talking about the 1 year time frame. Okay, we're talking about Greg Foss and Raul, who are both bond traders, essentially the traders who are coming from the traditional market, and they are looking at the freaking 1 year chart that is in a downtrend over here, and to them the 1 year time frame is a short time frame. That is the lower time frames, the 1 year time frame. So what Raul is saying is that there's a trade on the bond market from here to here. Okay. And Greg Foss is saying that this thing is going to zero in the long run. Right. So Raul is like, yeah, that's right. The bond market is going to zero, or you are going to lose. It is going to lose value in the long term, but you can trade the lower time frames, the 1 year time frame. Does that make sense?
Yep.
Right. So here's the reason Greg Foss has such a big issue with what Raul is saying. It's essentially because of that phrase of picking up pennies in front of a steamroller. Okay, because while there might be a trade to be had on the bond market, in terms of the long term, you might actually get completely wrecked if you are caught at the wrong time. How do I put this? Because these, by the way, when I'm representing this, I'm talking about the yields. Okay, I'm talking about the yields. So I misspoke over there. I'm talking about the yields. So I'm going to try to simplify this. For you guys the best I can. If the bond market is getting sold into, yields are going up, right? If yields are going down, the bond market is rallying. So what Raul is essentially saying is that because the yields are already rallied so much, there's going to be a trigger point where yields are going to have to come down because the Fed can't allow yields to go up too high. And I think we all agree with that. You agree with that too, Krisha?
Yep.
So why is that? If you were to explain it to people in your words, and don't be shy to try, why do you think the Fed can't raise rates too high?
Well, because they're in debt too, right? So think about it. If you guys have a loan somewhere, if you guys have a student loan, a student loan, for instance, if the rates go up, you're paying a greater rate on that loan. You are in debt to the government or whatever institution you borrowed the money from to pay for your tuition, right? Similarly, the Fed is also in debt, right? That rate going up, if they raise rates on themselves, they are also obligated to pay those rates on their loans. Now, my loan, if I'm holding a student loan, that's going to be far, far, far less. It's going to be so trivial, minuscule against the loans that these governments have built up, against all of the government debt. And it's a lot. And at one point, they won't be able to afford it. They won't be able to even afford the interest payments on that loan.
Exactly.
Right. So it gets very, very dangerous for them too. In rates going up, right? The bonds is what dictates those rates. All right.
Yeah.
Those rates go up, and then suddenly they are obligated to that much more. They have to pay that stuff.
Yeah, exactly.
Right. That's why it's dangerous to them.
Yeah, exactly. So essentially, yields in the long term, guys, have been essentially getting completely crushed, right? I drew the chart out to you guys, and I mentioned it, or rather, I labeled it as the bond market, but it's more so the yields on the bond market have been getting crushed. That has been in a downtrend, and if you are drawing this as a downtrend, okay, and the bond market is going up in price. So essentially, if yields are in a downtrend, Krisha, how would the bond market look? The bond market is essentially in a massive uptrend, correct?
So exactly. The bond market is so they're inversely correlated.
Yeah, exactly. They're inversely correlated. So now here's the issue. Here's the issue with, or rather, here's the issue that Greg Foss has. He's essentially saying that, Raul, you are being financially imprudent by recommending anybody take a bond trade, because it's like picking pennies in front of a steamroller, right? Like you could get freaking crushed completely because you want to trade small gains while going up against something that any moment may speed up. Yeah, and that's the best way to put it. It may speed up, hit the accelerator, and while you're trying to pick up that penny, you're freaking dead, right? You're dead. And why is he saying that? Why is he saying that? The reason he's saying that is because bond yields have gotten crushed so badly in this massive downtrend, right? They've gotten compressed so much, nearly to zero. In fact, they did hit zero during COVID, right? Yeah, pretty much 0.3%. That every incremental move right now in bond yields towards the upside, it's going to hit the bond market heavily. And if the market decides to say, you know what, inflation is way too high, we want higher yields, this downtrend is going to break towards the upside. And if for whatever reason the Fed lets this get out of hand, okay, and they lose control of this market, and you don't know how many moving parts may cause this temporarily, at the very least, to shoot up all the way up to something like even 5%, it's gonna literally crush people, because their trades on the bond market are extremely leveraged. And I'll give you an example, just to and I'd illustrated this to Krisha, I think this morning, but we can do it again for you guys as well. I want you guys to think about this, okay? I want you guys to think about, let's say yields at the moment has dropped down all the way to like around 1%, 2%, depending on your maturity rates, right? If you're trading on the, for example, let's pull up the 10-year. The 10-year, US 10-year. I am looking at the 10-year. What am I doing? So let's just hide my horizontals and switch on over to the daily time frame. So the 10-year currently is trading at around 1.8%. 1.8%. The 30-year, which I do have over here, is trading at around 2%. Okay, those are extremely low yields. So what I am trying to explain to you guys is that because yields are really low, their impact on the bond market is extremely high, and I'm going to demonstrate that to you guys. Let's take for example, let's go back in time to the point where yields were actually sitting at around 10%. How long ago was that, Krisha? Jesus.
Oh, this has been like in a perpetual downtrend. I don't know.
Okay, the last time yields were at 10%, guys, was, Jesus, I wasn't even born yet.
80s, 90s, 70s.
I wasn't even freaking born yet. Yeah, so 10%, okay? Let's say yields were at around 10%, okay? And the way, let's say you buy a bond, okay? You buy a bond that has a face value of $100, okay? And you are getting an interest rate, okay? A coupon rate of 2%, oh, sorry, 10%. So hard to say. You're getting an interest rate of 10%, okay? Now, I've explained this idea to you guys before already, that if the interest rate, okay, the new interest rate that comes out, okay, is now, you buy this bond, okay, you buy this bond. Actually, this is a really good way to explain this to you guys. If you guys buy a bond of a face value of $100, it means that when it matures after 30 years, okay, we are assuming this is a 30-year maturity. When it matures after 30 years, you will get your $100 back. And in the interim, you're going to constantly get 10% interest rates, right? So that's really good, because you're literally getting $10 each time that you get that coupon, right? The coupon is given to you. So I think it's given every 6 months. So you'll get around $5 after the first 6 months, and another $5 after the end of the year. So this is pretty good. Now let's say the Fed comes out and says, you know what, we are issuing a new bond. This time your face value is 100, okay? And instead of getting 10%, you're going to get 12%. Right? So far, you guys with me? You guys with me? A lot of like crypto folk who are too cool to understand this are probably leaving at this point, and that's to your own detriment, because if you guys don't understand this, you guys will never understand the DeFi market, because the bond market is slowly transitioning into the DeFi market. We'll talk about that soon as well. So okay, if you guys want to understand crypto and really figure out how to take advantage of the DeFi market, you guys need to understand this. So yeah, leave at your own effing demise. Good riddance to you, because you guys are going to be chump money for the rest of the market anyways. So get the hell out of here. The rest of you who actually want to learn, this is going to be really educational for you guys. So listen, do you guys understand this? I've talked about the face value, okay, and the coupon rate value, which is 10% in the first scenario, 12% in the second scenario, right? Okay, cool. Philippe says, yep, go on. So now Kusha, if I have to ask you, which bond is more valuable? Which one would you rather have if you had to buy either?
The one with the better yield, of course.
Yeah, right. It's no brainer. So
right. It's a no-brainer.
So what if someone wants to get rid of this bond? What's he gonna do? What, like no one's gonna buy it for $100, right?
Yep.
No one's gonna buy it for $100. They're like, why the hell should I? Why would I do that when I can go and buy it from Sean, who waited, and he's selling it for $100? So the only way you can sell bond A, so this is bond A, okay? The only way you can sell bond A is if bond A comes down in price to match the overall return at the time of maturity of bond B. Because remember, I said that you're getting $5, $5, $5 every 6 months, right? So right. But the thing is, you can't change the yield on this or the rate on this. What you can change is the real yield, all right? The yield derived from the coupon, right? So what you can do is sell the bond less than $100 to make it more attractive to the bond buyers, to the bond market. And the only way you can make it more attractive to the bond buyers is if the overall return matches the return of the current rate of the market, which is 12%. So this price needs to come down enough to match this price over here, right? This rate over here, right?
Yeah.
Does that make sense? Does that make sense, guys?
To me.
This is a really easy way for me to have pushed it to you guys, or rather show you guys why when bonds or rather when yields go up in price, bond value comes down, right? It's because of this idea over here. I don't think you guys will ever forget why now, right? Okay, cool. So now here's the question. How much? Okay, so rates went up by 2%. Okay, how much will the bond come down by? How much does the bond need to come down by? Easy, short as like sort of. If you have any questions, ask. But how much does the bond need to come down by? And this, by the way, is what Greg Foss means by it's just bond math, guys. Don't wreck your mind over it. It's actually very simple when you just extrapolate over the fact that over here, guys, you're getting 12%, right? Every 1 year, you're getting 12 every year for 30 years, and over here you're getting 10, but this is compounded, so the math is a little bit more complicated than just 10, of course. For simplicity's sake, just say there's no compound interest and it's only simple interest. You need to essentially make up for those losses, right? So you're getting 12, and over here you're getting 10, and 10. What does the bond need to come down by to be able to make up for that lost gain that you would have otherwise got on the 12, right? So we're not going to try to do the math over here because it is a formula. I have a bond calculator up over here, and the reason I wanted to show it to you on the charts first is because the bond calculator is a little dry and you guys will not understand, the mango way of understanding things. So over here is the bond calculator, and I'm going to essentially depict the same scenario. First, we're going to start with the bond face value right over here of $100, correct? The annual coupon rate is 10%, okay? The market discount rate, by the way, is essentially what the market wants the bond price to be. And the market discount rate is going to essentially be the new bond price that the Fed is currently releasing, or what the market says, we think the Fed should release this price. Ignore this column for now. Okay, ignore this column for now completely. Over here,
so just to sort of clarify, just to let them know, the annual coupon rate is basically what is a bond, right? So you're essentially lending money to the government, and the government, like anyone else, they would give you an interest for that. That interest is your coupon rate, right? Just for those of you who just want to, flesh that little piece out, and
yeah,
you're not really entirely sure how bonds work. That is basically the price that the government is giving you to borrow money from you,
yeah,
right?
yeah.
Just like how you would borrow from them, and you got to pay an interest.
Yeah.
The same thing with them. They have to pay you an interest now if they're borrowing from you.
Yeah, well said.
Okay, yeah, go on.
Yeah. So let's say we go through the same scenario. The bond face value is $100. The annual coupon rate is 10%. Okay. And another way to look at this, guys, okay, just for simplicity's sake, let's consider this the next bond that the Fed releases. Okay. This is the next bond that the Fed releases. And the next bond batch that comes out, the Fed says, you know what, it's 10% again. Don't worry about it. Okay, it's 10%. It's the same thing. So you guys don't need to do any calculations. So you guys don't need to know what the new bond value will be. In fact, if I click this compute bond pricing over here, it's going to give me the new bond price over here. Okay, underneath. If I click bond pricing, it's going to say that, hey, your new bond value is actually $100. Okay, it's still $100. Nothing has changed. But if the Fed comes out now, okay, and issues a new bond with a new market rate, with a new coupon rate rather of 12%, like we said, what is the price going to be? What's the bond price going to be? And remember what we said, guys. I'm going to take you guys back to our chart. Okay, I'm going to take you guys back over here. If the Fed increase the bond rate, right, if they increase the interest rate, the bond price needs to drop in value to be able to essentially be as attractive as the new Fed rate, right? As the new coupon face value. Is that clear, Kusha? Or am I kind of confusing?
No. That's right. Right. It has to drop, right? For it to be enticing now.
Yeah.
It's got to drop.
Yeah.
You want to balance it out there. Right.
Krisha's old bond of only 10% needs to drop in value to make it enticing enough to buy, right? Because the Fed is now offering a rate of essentially 12%. So let's see how much it needs to drop by for it to be enticing enough to the bond market. I'm going to click compute bond pricing, and it needs to drop down to $83. Look at that, guys. Only a 2% move, and needs to drop down to $83. Okay. In fact, let's go ahead and do another example. We're going to say, let's say it drops down. Let's say the Fed had increased the rate only by 1%. So it goes from 10% to 11%. How much does it need to drop by? It needs to drop down to $91 to make it enticing enough. So it takes a big hit. Each percent yield, each percent difference in the interest rate, guys, is going to affect the bond pricing very, very drastically. But that gets compounded that much more if the base interest rate is already low. So right now, guys, we've increased the interest rate by 1%. Okay, 1%, and the bond price dropped from $100 to $91. Correct? Correct, Krisha? Following me? Are we all on the same page?
Yep. Okay. We're on the same page.
Let's redo this. Let's say that the annual coupon rate was 1%. Okay, and essentially we dropped down to we were at 1% not too long ago, especially on the 10-year. I think the 10-year yields were sitting at around 1.03% just last year. So let's say the annual coupon rate is 1% for simplicity's sake. Okay, and the Fed increases the rate to 2%. Okay, let's see how much the bond value needs to drop by from $100 to make it enticing enough for people to buy the older bonds. 77. So that's literally a 25%
what?
hit. Yeah, just think.
What?
And you guys, do you guys know why Krisha? Do you guys know why Krisha is so
Oh, that's
surprised over
because
here?
it's 100%, right? It's 100. They've raised it by 100%.
Exactly. So guys, exactly. So Krisha gets it. In the initial comparison, when we went from 10 to 11, the real rate of increase of the interest rate increased only by 10%, right? The interest rate compared to 10%, right, to 11 has increased by only 10%. But if we go from 1 to 2, which is still a 1% increase, the real rate of increase is actually 100%. Do you guys follow that? We doubled the interest rate. It's 100% increase in the interest rate versus 10 and 11. It's only a 10% increase in interest rate. So when the bond market is trading on leverage, guys, when you go from 1 to 2%, 100% increase in interest rate is literally a liquidation event. Like they get wrecked, right? Their collateral just literally goes to zero. Do you guys follow that? This is what Greg Foss is talking about. If he's worried that if people are caught on the wrong side of this trade and they don't trade it the way Raul does, and that's what he meant when he said the world is not set up to trade like you do. Please don't promote the ability when few understand bond math, right? Because the bond market is trading on leverage, guys. Okay, because these few incremental differences make a huge difference. You will have to wait your entire lifetime to be able to make your money. No, you will no you'll never make your money back. You'll never make your money back. You'll never make your money back. Yeah, that's what he's talking about. That's what he's talking about. If you buy bonds and you end up being a bag holder of the bond market, you're screwed. And I think Greg Foss's issue is that he understands that while Raul and people like me too, who can come on over here and say, yeah, trade the this is a short-term time frame, right? And the reason I'm so hesitant, guys, to tell you guys about short-term trades is because people end up becoming bag holders. They don't trade it in that short duration that I will trade the short-term time frame. I have the discipline to get out of my trade if I have to. And Greg Foss understands that people are likely going to just blindly follow Raul without understanding that he has a horizon of only 12 months and he's going to get out of the trade, while the rest of the world may end up becoming bag holders. And if you end up becoming a bag holder of this market, you are going to get wrecked. You are going to get heavily wrecked. Right?
Exactly.
Yeah.
And,
so yeah.
and this is where, by the way, when you're listening to the noise. So now the thing about trading, and this is not just with crypto, this has happened in traditional markets as well. When things were not even online, this used to happen on the floor in the pits. When there's too much noise, that noise can get to you. But you need to understand now, when it comes to these institutional guys and people with a lot of they have that status of great investors. When they are promoting something, you guys need to understand that they're, first of all, you do not know their account sizes, you do not know if they're trading on leverage. More importantly, you do not know if they are you don't know their time horizon.
Yeah.
Right? So it's very, very important that you filter out the noise in that regard. So ask yourself, okay, what is, like, who's saying this? Is it Raul? Okay, what's Raul's time horizon on this? How is he playing this? Right? What he's probably doing does not probably fit with your personality, and it doesn't fit with your expectations. Maybe you're looking to turn a trade in, say, a month, as opposed to Raul, who's looking at 6 months.
Yeah. Exactly.
And things can get like really, really topsy-turvy in that. So it's very, very important that you understand who you're taking the information from and what you're playing.
Yep. Exactly. Well said, Krisha. That's really, really important. And Mango could have done so much better in terms of a subscriber count and our views and all of that nonsense. We are taking the same path of just like, I don't know, how do I even put it? If we didn't care about you guys, we would have done better. As stupid as that sounds, right? That's what the world incentivized. If we didn't care about how well you guys do, and we just cared about getting you guys in the emotion of things and getting you guys all hyped up and be like, yeah, do this, do that, putting you guys to action all the time. Because sometimes Krisha and I come on over here and say there's nothing to do, just do nothing, and that's boring, right? Mango's boring that way, and at the end of the day, man, YouTube is an entertainment platform, and if we are not being entertained, if we are not entertaining you guys, we will get punished, right? So yeah, that's the unfortunate truth. There's a question over here that Richard Cardano says, it's why so many people like Max Kaiser constantly saying that the financial system is toast. It is toast. It is toast in the long run. In the short run, though, there could be a lot of pain that people try to front run, right? They try to front run the financial system getting toast, and they may actually. So for example, think about it. Raul is saying that the bond market could rally 20%, and he's right. It could, right? But if people put on a bet thinking the financial system is toast, a 20% bond market rally against you, and you're 5x leveraged, you're done. You're liquidated, right? On a 20% move against you, if you're 5x leveraged, you're liquidated. So Sherwin also asked a question. I'll let you answer this, Krisha, and I'll step in. He says,
Sorry. Sean, first of all, Sean, take a sip of that drink.
Thank you. I probably need it. I do need it, actually.
So Sean gets some. He gets pizza today for that bomb ass explanation.
Pizza. And look at that. Our viewers, Krisha, dropped from 100 viewers to... our viewers dropped exactly the rate the bond market would drop by if interest rates went up from 1% to 2%. It's gone down to 76 viewers. And I knew this would happen. It's like...
People want the quick cash. This is the stuff that's really going to keep you in the market. This is the stuff, like, you think I wanted to learn this? Like, it was just Sean. He would come up to me and he'd like dispense all of this knowledge, and there's so much that I'll just be so stunned. I'm like, I don't know what you're saying, man. And then he'd take the time to sort of break it down. I'm like, oh, I'm like, wow, that's super profound. And that sort of changes the way you sort of look at things. Suddenly you have more information in front of you, and that's very, very liberating. It's like TA. Like, think about it. Think of as soon as I understood that I can do this on my own, I can just read the chart on my own, as opposed to looking at everyone else's charts, as well as their analysis and where they think price is going to go. Like, it's a really, really liberating feeling, right?
Yeah.
So it was similar with this too.
Read the comments, Krisha. The comments are so funny. Hey Ace, good to see you in your VOD. Good to see that you're still following Mango. I read your comment the other day on the other video too. Well, I smiled, man. When I saw your comment, I smiled with a big freaking smile. Mango is the Khan Academy of crypto. Oh, yeah, that's Krisha was literally saying that this morning.
I was telling Sean that his biggest edge is the fact that he can really break things down so simply. I'm like, if there's anyone I'd compare you to, I think it would be Sal from Khan Academy.
That was a huge moment for me when Krisha said that. That really made me go like, damn,
really cool
because
that it's coming from you. It's probably, it means that much more.
Yeah.
Lindeka, that's absolutely right. You don't these are things, by the way. Now I have a degree in business and management information systems, and like they taught us bonds, but it was so surface level that no one learned anything. And this is the stuff that people ought to know, because this ultimately is money flow. People want to know, right? Where is the money at? What's the next market that's going to move? Well, it's all in here. Right, that bond market really dictates the overall money flow of the world right now. Yep,
well said. And I do want to tie this into how does this relate to Bitcoin? How does this relate to Bitcoin? And Sherwin did ask a question that we could tie it into, tie this all together with. He says, so if the bonds... Oh, wait, no, this is not the question. I'm going to scroll up. I try to keep up with the questions while I talk, guys. That's a new skill I've been trying to learn, keeping an eye on the questions while I'm explaining things to you guys. It's not easy, but I'm trying. He says, so yeah, that makes sense. So the Fed at the next FOMC meeting can just move 25 basis points and move mountains. Yes and no. Yes and no. Yes and no, because you got to ask yourself, Sherwin, if you if you are thinking about this, and if I am thinking about this, and we're all noobs, okay, we're all freaking noobs to the real bond traders. And you know what? I would even consider, for example, Raul and Greg Foss also the noobs of the market, because they're not trading bonds anymore, man. We're all trading crypto. Right? We are looking at the bond market and thinking, hey, yeah, we are big shots because we understand how things go. But those guys who are really trading bonds, they're literally doing this day in and day out. Okay, they're doing this day in and day out, and they're thinking about everything. So you got to ask yourself, how much of this is already priced in? So I really like that you said 25 basis points. By the way, to the rest of you who are thinking about what does he mean by 25 basis points, 25 basis points is just another fancy way for financiers to feel better about themselves by using all these technical terms. It just means a decimal. They don't want to say 0.25. They don't want to say 0.25%. Okay? They don't want to say it. They're too cool for that. They want to say 25 basis points because they can feel smarter than the real computer scientists like me and Mark. They want to feel scientific. So they'll say cool shit like basis points. But 25 basis points essentially means 0.25%. So if you think about it, if that is the number that is in everyone's mind, right? And the current notion is that the Fed is going to increase 4 times this year. Okay, 4 times. So if you go 0.25 multiply 4, what do you have? Well, you have a nice round number of 1%, which happens to line up with our example over here of interest rates going up by 1% to 2%, right? Going up by a total of 1%. And we showed that if interest rates go up from 1% to 2%, or essentially double, the bond prices drop from $100 to $77, or essentially lose 25% of their value, right? So you lose 25% of your value if interest rates double. And you now got to ask yourself this question. Okay, you got to ask yourself this question based on what Jay Powell was saying in October and November. Could the bond market, who do this for a living, could they be pricing in those interest rates ahead of time? Could they be pricing in these 4 hikes of 0.25 basis points? Could that already be priced into the bond market? Is that why we are seeing yields rise up over here? Go back to... Does that make sense? Right? These yields coming in all the way from December, by the way. Okay, we are saying that, so Jay Powell essentially made his comments in the end of November-ish, which kind of makes sense as to why yields, November, yields bottomed end of November. I think that's when he said I think that's when he made his comment. Julian, could you confirm for me? Julian knows all of this, guys. Julian's a man. Is that when Jay Powell essentially Powell made his comment on, he said, we can forget about inflation being transitionary.
I think Jay Powell is really fitting. Punching everyone in the gut.
No, Julian, it's just easier to allow people to know that the entire world is complicating things for no reason when things could be easier. That's the way you look at the world. Things could always be easier. Yeah, he said in a roundabout way, says Julian. Okay, so essentially, right, that's around the time when the bond market started pricing in higher rates, right? And you're seeing rates go towards the upside since then. Now, everyone's talking about it, and you got to ask yourself, is it already priced in? Because the bond market, who does this for a living, they are analyzing every single sentence. So that every single sentence that comes out of the Fed, right? So is it already priced in, and are we actually seeing a sell-off? That's interesting. Yeah, like I still think we could go up a bit higher. This is the 30-year, right? Let me look at the 10-year. So we are, look at that, by the way, guys. I wasn't actually keeping an eye on this, but we are seeing some resistance over here on the 10-year yields. But I think we could get up over here to around 2%. I really think we could get up over here to around 1.965% to be a little bit more precise. So I don't think this is done yet, but you can see the bond market beginning to take in a position, right? Essentially, the bonds are being bought back in, right, by the bond market, and that's why you're seeing yields see some pressure. But I think we could make our way all the way up to around 2%. But the point is, Sherwin, to answer your question, is everything priced in? Is everything priced in? And if things are beginning to get priced in, even though we may see some quick moves, further moves, or rather pain in the markets, right? Temporary pain in the markets. I don't think there's much more to go, and that you're kind of seeing that in Bitcoin. Where's the sell pressure? Like Bitcoin has been, we could see one more leg, but I think that's it.
Yeah.
Like I'm not going to trade for that one leg because it could bounce in my face really, really hardcore. So I'm not gonna be trading that. That's Sherwin, Julian, anybody who's listening over here from the beginning of the stream. That's the big reason why I'm not trading the mid time frames over here, because the mid time frames are likely going to bounce in my face one way or the other. There's only short-term time frame trades, right, where you get in, get out really quickly, within like a 12-hour to 48-hour period, or there's longer time frame trades where you're playing the monthly, and that lines up with what I'm saying, right? If we do trade down, I think we're going to bounce off the monthly levels, which is coming in at monthly Tenkin, monthly Kijun, right over here. Right, monthly Kijun max around 35,000. Monthly 21 EMA is sitting right in the middle of both those levels at around 37,000, right? And I'm buying there. And I know other people are going to be likely buying over there. There's too much buying pressure coming in over there. If we do lose those levels, it's going to be painful, and that's going to be a trade towards the downside, of course. Then I'll be a seller, of course. I'll be a short-term, short trader on the high time frames, but we've not done that yet. So I'm not going to trade that yet. We've not triggered that yet. So you're seeing everything line up over here now, right? Where Raul is saying that, hey, we've seen too much of a sell-off in the bond market. We could definitely rally from here. I agree. I think the bond market is going to rally at this level. Weekly. This is the 10-year, yeah. Somewhere around 2%, right? Somewhere around 1.96. So we have a little bit more to go before we do see the bonds rally. But as soon as yield starts seeing around a 2% hit, I think the bond market is going to see a rally, and Raul could end up being right. And if we do start seeing that, the entire market is going to fix itself. So those are my thoughts. What are your thoughts, guys? Any questions? Krisha, I'll let you take over for a bit while I sit back.
I'm just thinking, like, the Fed's best interest is to pretty much screw over everyone else, because what's really forcing their hand right now, right? You got to think of that. And it's just this entire sort of, it's not even a narrative anymore. It's very, very real, which is the thing of inflation. So governments, I feel like across the globe now, we're even seeing this in Canada, wherein like inflation is becoming a big thing. Like people are talking about it, people are posting memes. And let me tell you something, as soon as something becomes a meme, it is freaking real. All right. And people resonate with that stuff. So I feel like it's this entire thing of inflation not being transitory, and people are feeling it. More importantly, the fact that people are feeling it.
Yeah.
That's what's forcing their hand right now. Right? Yep. They got to come out and they got to freaking answer some really, really tough questions. And if they even have to posture hawkish, when I say hawkish, it means they have to posture in that they're going to start, they're going to sort of draw back on their bond purchases, and then, they're going to allow rates to drift up slowly, essentially even bringing inflation into order. They're going to let it happen. So even if they have to posture and say that, guys, we're going to let that happen, we're going to let rates drift up a bit. The thing is that think of when Jay Powell comes in. It's like a big thing, right? When he's always freaking giving any of his statements. And automatically, as soon as he's just done with an interview or something, you see things start happening in the markets. People react to that sort of news. People react to what he says. So even if he postured there, it's already sort of reflecting on the charts. So maybe that was the play. that he comes off as, hawkish, allowing rates to go up, and people are like, oh, Jay Powell said this, guys. This is the next trade, right?
So you think he's not going to? This kind of lines up with what Wolfie is asking too. Do you think he's actually going to raise rates, or do you think it's all posturing?
I think it's posturing. They can't let it happen. If they let rates go up, how the hell are they going to service their debts? Like, they're in debt. Now, if I was in that enormous of a debt, it comes. So I think the main question everyone should be asking here is, can they afford to pay the interest?
Okay.
At what point are they going to be like, oh shit, we don't have money? Like, when does that happen, right?
That's a really good way to put forth the dilemma, and I can use that as a starting point to show you how they can raise interest rates. And this Sean is, by the way, leaving. So hey Sean, thanks for joining the stream, man, and congratulations on your sale. Hoping to see you in the next stream as well. Love ya and have a good night. But yeah, Wolvie's question, to get back to it, he says, I had a question earlier. If you think the Fed will try to keep yields in range, or will they try to crush them further for cheaper debt? What do you think? And this sits in line with Krisha's statement right over here, where she said, hey, how's it going, Jesus? How's it going, bud? But Krisha just said, Krisha, could you phrase your sentence again? You said, can
they really will they be able to afford the payments?
Make their payments. Make their payments. Okay, that's a really good way to phrase this. And let me give you guys a better way to look at this, okay? Because I think people are missing the big picture here. They are too focused, they're tunnel visioned on the narrative without understanding that the system is far more complex than just looking at interest rates and looking at the overall depth of the US government. So Krisha's argument, which is not wrong, by the way, is that if interest rates go up, the debt is going to go up. Correct? If interest rates go up, the debt is so high right now that they are going to struggle.
It gets expensive. Yeah.
Right? Yeah. The payments are going to increase. Okay.
Yeah.
So let me go ahead and pull up should I pull up the bond market? I'll pull up the bond market. This is Bitcoin dominance. So if interest rates keep going up over here, the Fed is going to struggle to be able to facilitate the payments on the bond market, on that debt. What I like to do usually, and forgive me over here, guys, because I'm a bit tired right now, so I'm going to try to explain this to you guys as best as I can. What I like to do when I struggle with these concepts that can get a bit more convoluted, I try to map them to real life scenarios that I am very, very familiar with, because then I can look at the big picture. Because usually complex topics, you can map them to real life scenarios that are simple to you because you're familiar with them and you have had experience with them, and then you start seeing other pieces connect to your scenario, right? So what I would like to map this to for you guys is the real estate market. Let's think about you buying a home and you having to facilitate payments on that home. Okay, Krisha, what are the two ways that your payments can be low on a monthly basis, okay, to be able to pay off your mortgage, to be able to pay off your home? Okay.
Well, 2 ways. Okay, you're asking me that, or you're just?
I'm saying that out loud, but I don't want to put you on the spot either. So basically, Canada is a really good example. You could either have a $1 million home, right, with very, very low interest rates of, let's say, 1%, right? At one point, the interest rates were like 0.63% or something. Very, very low interest rates, right? So your $1 million home is the cost of the home, but your payments on a monthly basis is your ability, right, to facilitate that loan. Okay, that may take 30 years, that may take 60 years. It doesn't matter. It's your ability to facilitate that, right? So if your interest rates are really, really low, your payments could be stupidly low, principal plus interest rate, etc. And let's say for argument's sake, your payments are $1,000. Okay, just for argument's sake. Okay, just to keep it low. $1 million at 1% could be a $1,000 payment every month, or you could have a, let me just get some more space here, or you could have a house that costs only $100,000. This is a comma, by the way. Apologies for the scribble. And has a interest rate of, let's say 10%. So this is 10 times the interest rate, right? But the house is 10 times cheaper. So you're in, again, I'm simplifying it over here. This is not how the math works. I'm simplifying it over here for you guys to get the conceptual idea. Your house, the cost of your house drops, okay, from 1 million to 100,000, but your interest rate goes up by 10%. So your payments at the end of the day ends up being the same, $1,000 per month. Does this make sense, Krisha?
Yeah.
Right? So in one hand, you have a much more expensive house, right? But your interest rates are really, really low, right? But on the other hand, your house has dropped in value, really cheap house, but your interest rates are high, so your payments are still $1,000. So in both cases, think about the scenario here, scenario A, scenario B. In both cases, your affordability, right? That's how the government looks at it. Your affordability, or in your words, Krisha, you said your ability to facilitate the payments, your ability to facilitate your debt. These are both debts. One is a $1 million debt and another is a $100,000 debt, correct? They're both debts.
Right.
And in one scenario, we're talking about, oh my God, US debt has gone up crazy, right? And in this scenario, you're saying, hey, US debt is pretty low, we are fine. But the interest rates really dictate the government's ability to facilitate that debt. And in both scenarios, the amount of payments on a monthly basis is the same, even though one debt is so much higher. It's the interest rates that dictate it, correct?
Right.
Right? But it's also, what people forget is the cost of the house that dictates your payment. Because if your house is really low and your interest rates are high, your payment could still be low. And that's the missing element that people are missing over here. And you guys are probably still confused, and I don't blame you. Because right now what's happened is that we have seen interest rates go up. But what has come down, guys? What is not reflecting accordingly, even though the interest rates are going up? Because what is the... Okay, Krisha, let me ask you this question. Why do you think that the government cannot allow interest rates to go up? Say it again, but I want you to think bigger picture. It's not just them, right, that they're worried about. Who else are they worried about?
Sure. Who are they worried about? When interest rates go up?
Think dollar milkshake.
Dollar milkshake theory.
She's just on the spot and she's getting nervous. There's sovereign debt of around $13 trillion. Okay, there's a bunch of other countries, a lot of other countries globally that also owe dollars. They are also in debt, and if their payments, their ability to pay those dollars goes up, right, they're also screwed. So the whole world is freaking screwed if things get too difficult and too tight, which is why I'm not sure people aren't making a big deal of this, but China came out and said, Xi literally came out and said, if the Fed increases rates, the world is going to unravel. So be very, very careful. He literally came out and gave a warning to America saying, don't do it. Okay. Because there's a lot of pressure on the rest of the world as well. Why? Because it's the dollar. Guys, the dollar is essentially what they need to pay back. And that's the interim factor that you guys need to be looking at, and not just the debt. The equivalent to the house over here, guys, is the cost of the dollar. And that is what I'm going to pull up for you guys and show you guys that while interest rates are going up, the dollar is actually coming down. Dixie is not seeing the continuation of, look at that, guys. Oops, why'd I go to one? The Dixie is not seeing the continuation of upward pressure that everybody expected. The dollar's getting cheaper, right? You're seeing that downwards pressure, Krisha? The dollar is essentially equivalent to, at this price over here, at around 97.98, being $1 million for your home. Versus at 95-ish Dixie being $100,000 for your home. So while interest rates have gone up, the dollar has gotten cheaper. Get it? So if the dollar continues to get cheaper and cheaper and cheaper, it will counteract interest rates going up. So the Fed will be able to essentially increase rates without impacting the ability to pay off their debt, or the rest of the world being able to pay off the debt, as long as the dollar gets cheaper. Get it? It's like your house going down in value and interest rates coming up. Does that make sense?
Yeah, that right? Actually does make sense.
Right. So that's why
it's like a countering force in a way.
Yes, it's a balancing act. It's a balancing force.
Yeah, it's a balancing. Okay.
So this is the missing piece that people are missing, I guess.
Tony, get 2 pizzas for that. I decide the toppings.
Oh man. Jesus Christ. Like, Sean's like, this is amazing. And viewers dropped down by another 10. It's like, what's this idiot talking about? We want to know if Cardano's going up.
Cardano to the moon. He deserves 100 pizzas. That's right. I'll eat 99. I'll give him 1.
So yeah, Richard Cardona, you're right. The Dixie is a poor measurement, but it's what the world uses right now, and they need to facilitate their debts. They need to pay off their debt, and as long as the world is denominated, or their debt is denominated in USD, it's going to continue to be important until it all unravels, right? Until all of that debt is unraveled and the Fed is able to take all of it on their balance sheet. And this is why, by the way, and to answer easy short, I'm not sure if you're still here, buddy, if you're still awake. Are you still awake? Let me know in the comment, because I did, in the chat, because I did read your comment. You asked, you said something along the line, Sean, we mentioned something about the bond market slowly coming to the DeFi space, right? And I want to reference Dan Tapiero's tweet on this, and I'll leave this up here for you guys to look at. Yeah, I'll let Krisha talk about this a tad bit while I go take a quick washroom break. I'll leave this up.
I'll let you guys read it. Let it sink in there.
Yep. I'll just take a quick washroom break. But essentially says massive generational wealth transfer beginning. Simple chart to explain this. Institutions are stuck and late. Flood of liquidity coming into the digital asset ecosystem. Search of yield and return. He is so freaking right.
Yeah. Like the yields that we're seeing in the DeFi space right now, like far exceeds that of what you're getting in traditional, right? And we can see that with things like even BlockFi and other platforms out there. And he's been a big proponent of yield within the DeFi space. Definitely someone to follow, by the way, on Twitter. I believe FTX too. What's his name? Sam? I think FTX, they have like a huge fund that they're putting into let's say cryptocurrencies, altcoins, I believe. Something like ridiculous. So there's a lot of money pouring in here. This is gonna be it. And I feel like I don't know, correct me if I'm wrong. I want to know what everyone's thinking about this. Like there are some funds out there that are super, super big, right? A lot of them are actually, at least I think so, people are waiting for, say, Bitcoin has the greatest market capitalization right now, right? For Bitcoin to get up over a certain market capitalization for them to actually enter. Because before then, it becomes too risky. Like they have enough liquidity to move the market if they want to. So some of them I feel like are actually waiting for Bitcoin to reach a certain market capitalization to even get in. Like think of how much time you and Michael Saylor, like apparently he had like sleepless nights to even get into the market. Right? For him it was he felt like there was a crunch for time. GX is pumping Sol ecosystem, right? I'm not sure. I'm not sure if they're focusing on Sol. They didn't specify that primarily. Morley, Sam Bankman-Fried. Yeah, that's him. Man, he was a huge proponent for Sol. Remember when he came out on freaking Twitter? He's like, I'm buying Sol here. Even if it goes down, I'm still buying more Sol. And then Sol rallied. And I believe Sol was sitting at some $3 or something stupid back then. And Sol just freaking went on a tear. So Sam like literally just came in and gave everyone the biggest tip of the cycle.
What I miss?
So I was so I had a quick thing, like even in terms of let's say traditional portfolios versus millennium portfolios. For traditional, Sean, like some of these hedge funds and stuff, some of these funds are like massive funds, right? Do you believe that quite a few of them are waiting on the sidelines for Bitcoin to reach a certain market capitalization for them to even enter?
Oh, hands down, hands down.
Right? And
And
I feel like in that interim period before they can even enter, a lot of the wealth distribution
it's
has
gonna,
sort of already begun, like it's already
yeah,
started, right?
yeah.
It's just running away at this point. How much did FTX invest into the whole crypto fund thingamajig?
Oh, 2 billion, right? 2 billion.
There we go. 2 billion, $2 billion.
And that's like nothing to them. So think of it this way, guys. When you guys look at like these really, really low cap coins on these alternative exchanges like KuCoin, etc., and they have very low liquidity, right? The reason you guys get into those assets is because, hey, before it shows up on Binance, before it shows up on Coinbase, I want to get my position in, because once it does, it's going to like go crazy. And when you try to get your position in, you're going to struggle to get your position in because the liquidity is so freaking low. You have to really, really, really take the time to like slowly put your bids on and hope you get filled. And even then, when you do it, you're thinking to yourself that, damn, I can't get out of this position easily. Like, so I'm not going to be able to get out like that. The way you can get out of Bitcoin and Ethereum, Solana too, because there's liquidity on those coins. You can trade them in and out. These other coins, you can't. You have to like take a more longer term view and understand that if you do want to get out in a pinch, you're going to take a bigger hit, right? So you have to account for that slippage. Similarly, these guys look at Bitcoin that way. That's how they look at Bitcoin. Bitcoin is their, like, Coinbase is their KuCoin, right? Binance is their KuCoin exchange where they are getting in with massive risk. They're thinking, damn, there's barely liquidity here, so I'm taking a longer term position on this one. And if I do get out, I'm allowed to, I'm okay to, but I'm gonna have to take a hit on that. So that's how they look at Bitcoin. And even the theme for that matter, they want to get in early enough and they're willing to take that risk. But there are other people who say, you know, I'm not touching KuCoin. I'm not going to touch KuCoin. It's too risky for me. I want the ability to get out of my assets whenever I want. Even though I don't trade in and out often, I have a hardcore rule of not trading any low caps, and Bitcoin's a low cap to them because it's too risky, right? It's too risky. So understand the people who are getting in right now, they're bold and they're taking the risk. So yeah. So let's talk about this now. Dan Tapio, Kishore, what are your thoughts on this? I can't hear you, by the way, Kishore, if you're talking.
Oh no, I'm right here. I just stepped away to get a refill.
Fair.
What are my thoughts on Dan Tapiero on the tweet? It's it's true. This is it. I think this is the millennial shot. This is our chance. This is the chance at redistribution of wealth. Which and because the thing about millennials right now, we've been pushed out of so many markets. Right now, I mean, I can't speak for every sort of country, but at least Canada, like the average home right now is going for $1 million, but your down payment is 20%, right? And how much is 20% of 1 mil? No, no, you on. They're saying you're muted.
Oh, damn, I'm muted. Oh, damn it. Okay, so this is what I was essentially saying. This was the rant I went on. Let me turn on the air conditioner now since I messed that up. Okay. You guys can hear me now, right? Confirm before I go on. There has to be a mute mistake each stream. Am I still muted? It should be fine now, right? Okay, cool. Okay. So this is what I was saying. I was like, I've learned that one of the easiest ways to position for an investment thesis for the long run is to think about things through a demographics first perspective. Okay, think about the demographics. Think about where the world is going in terms of the demographics, and then start narrowing down your thesis. But if you have a demographics first approach, things get a lot easier. A really good example is what I had said to everyone 10 years ago, and I was laughed at. And of course, I had a bias to my view, but there was foundation to it. I had essentially said that esports is going to blow up in the future. Gaming and esports is going to blow up. And my foundation thesis for that was that, hey, I'm sitting here in a gaming cyber cafe and I'm seeing people my age and older, right, like 5 to 10 years older, not go to work, not go to university, and skip work and come back and play video games, right? And we are the ones who are going to end up, because this is what I was seeing, guys. I was seeing a generational how do I put this? I was seeing that people who are a bit older than me, like around 5 years to 7 years older than I was, who were still in that phase of wanting to play video games but were entering the real world, they weren't willing to let go of their gaming life, right? I'm like, damn, what happens when these guys actually really start owning, and these are wealthy kids. What happens when these guys start owning their family businesses? What happens when these guys start actually being wealthier and have all the money? They're not going to have to skip work and pretend to be going to work. They'll just do what they want. They're going to play whatever games they want. They're going to fund gaming companies. The money is going to go into the gaming world. That was a demographics first approach, because I saw these kids who are currently forced to go to work because their parents are forcing them to go work. They are going to be the ones with a lot of money and still playing video games even in the future, right? As long as the gaming world kept going in its trajectory. And now, guys, look at where we've come. Look at what we've done over the past 10 years. The gaming world is flush with money. The amount of money that I've spent on skins, right, on DVD is the kind. Even though it's not that much, I thought I'd spend zero compared to 10 years ago. I thought it was stupid to spend any money on skins and shit. But now I do it like willy-nilly, whatever, because it doesn't matter and it makes me happy, whatever, right? And there are people who spend freaking hundreds of thousands of dollars just on gaming items in game because of demographics, right? You can think about demographics and you can think about where the money is flowing. Similarly, now you take that one step further and think about the bond market and Bitcoin, and you think about the boomers, Gen Xers versus the millennials, right? Millennials are coming into their investing period, right? We've gone from being stupid kids playing video games to stupid kids who are spending a lot of money, a lot of our own money on video games, to stupid kids who have a lot of excess money now, a lot of excess buying power, who are thinking, where should I invest? Where should I invest my money? Should it be the bond market? I'm not really feeling it. It barely freaking moves. 1% yield here, 2% yield there. That's not for me, right? Should I buy real estate? I'm not really feeling it. All of these things are at ridiculous prices. Yes, I've saved $200,000 of down payment money, but really to put a 20% down on $1 million home that I don't think should be worth $1 million, should I really do that? I'm not feeling it. I have no connection to this anyways. I really want to move. I want to travel the world. Think about how millennials think right now, okay? And we are coming into our strongest earning decade, right? Ages 30 to 40 is likely going to be the best we do. And then after that, we're going to have excess capital, even more excess capital. Where is that money going to go? You think it's going to go into bonds? No, Dan Tapio is right. It's going to go into the crypto market. He says Bitcoin over here, by the way, but he means the crypto market in total. And it's going to go into stocks. That's what it's going. That's the direction it's going to go into. And when he says stocks, Dan Tapio understands that the stock market is constantly adjusted. He's talking about S&P. He's talking about NASDAQ. By the way, guys, the average life of a stock in the S&P, the average life of a stock in the S&P is around 14 years. 14 years. It doesn't stay in the S&P 500 for too long, right? The average lifespan of a stock is around 14 to 15 years or 14 to 18 years, and that's likely going to go down to around 10 to 12 years in the future. It doesn't stay there that long. You know why? Because it's constantly readjusted based on what the demographic is voting into power. So this is going to be the future. All the money we inherit as millennials, all the money that we make as millennials is going towards the crypto markets and the stock markets. And I think he's 100% right, just based on demographics. Yeah, exactly, AJ. We are investing in Dogecoin, we're investing in SHIB, GME, AMC. We're going to get wrecked. We're going to learn, wait a minute, what is going on over here? And we start putting our money into assets that we you're not seeing any of them invest in different bonds, right? They're not investing in corporate junk bonds. There's an entire bond market. There's an entire sector of bonds, by the way. It's not just US treasuries, right? There are a lot of different kinds of bonds that you can buy. None of them are touching any of it. They don't give a rat's ass about it. They're thinking about crypto and stocks. That's it. Crypto and stocks. And that alone should tell you the direction of everyone else. So let's say I invest in Dogecoin, I invest in SHIB, I get completely wrecked, I learn my lesson, and I start starting up Bitcoin and Ethereum, Cardano, Solana, whatever, right? I start starting up things that actually are doing things. I'm like, you know what? I think Bitcoin and Ethereum are safe and they're giving good returns. I can take bigger positions in Bitcoin and Ethereum and do well over the long term. I'm going to do that. Okay, and out of maybe 100 people, 10 people will be like me, and those 10 are enough to go and tell their friends and family about how they should go about doing things too. And out of all the friends and family that you tell, 10% of them are going to do things right? And that's how it starts perpetuating the idea, the notion. And then slowly, now people think, like Greg Foss thinks the bond market is dead. I don't think so. I shouldn't put it that way. Greg Foss thinks that the bonds in general, or rather a lot of like even Ethereum folk think that the bond market is just going to go to zero completely. I don't think Bitcoiners really believe that, because what is really a bond? A bond is essentially just a loan, right? You could have the entire bond market reshape itself on DeFi, and I think that's what is happening, and I think that's what Dan Tapio is essentially trying to say over here as well, that we are essentially going to be hunting for yield, right, in the DeFi market. Like, I use BlockFi, for example, right? And I'm getting my yield from BlockFi, right? That's my version of a bond. I'm locking up Bitcoin, I'm locking up USD in a bond, right? And I am getting my yield. Slowly, crypto companies are going to start issuing bonds, and they probably, in a way, they kind of already are, right? That's what staking is. And they are going to start offering yield for getting funding, etc., etc. No, that's exactly what these staking platforms are. Essentially, this is essentially de facto bond markets. Does it make sense, guys? Krishan, I'm not sure if you're still here.
I'm right here. Of course I'm here, Sean. I never get tired of listening to you.
We've been talking for 2.5 hours. We should be wrapping up soon.
Yeah, pizza is on its way.
Is it really?
No, not yet. I'm still deliberating on the toppings. He's excited. He's low-key excited. He just doesn't want to show it, guys.
I am super excited. So, Krisha Julian says, I wonder if the 60-40 mandate portfolio gets switched to 70-30, 80-20, if real bond rates continue to deeply negative, to be deeply negative for an extended period. Yeah, it's going to happen slowly and surely because of the yields that the bonds are giving right now, right? Especially the real yields. Even at low yields enough, Julian, is enough to mandate pension funds to start decreasing their allocation of their portfolio to equities and bonds, right? Now, the thing about equities and bonds alone is that equity markets are completely open. Most, at least Nasdaq, etc., are trading at extremely high valuations. And if you add even 1% allocation of Bitcoin to let's say you go from 70-30 equity to bond ratio to 70-29 and 1% Bitcoin, right? You basically take 1% of your bond allocation, put into Bitcoin, you drastically improve your performance over the long run, right? Even that 1%. So I think that's how it's going to start happening, right? It's slowly going to start eating away at the bond market and even some of the stock market, and start putting it into value plays, which sounds ridiculous, like Bitcoin. Yeah, Kusha, you had a thought?
Yeah, I was just thinking of the government. Another thing that they can do is sort of change things up by introducing a digital currency. They could start a whole new redistribution and sort of re-engineer the money.
Yeah.
By issuing their own digital currency. But in the last sort of Fed interview that was conducted,
Kusha, you're a bit soft, by the way. I'm not sure if it's just me.
Okay. Is it better now?
Yeah, it's way better. It's way better.
Okay, cool. So in the last interview with Jay Powell, someone asked him, like, this was towards the end, and this was like, seriously, guys, it was just like 2 seconds. One of the senators asked him if, does the Fed have the rails to actually issue and distribute their own digital currency? That was the first question. And Jay Powell said no, they do not, and it's safe to assume that they do not. The second question to that was, okay, can another well-regulated digital currency in this space, coexist with the US dollar? Would that be okay? And he's like, yeah.
Yeah.
That was literally it. Right. So now we could see the other day when Sean, we had that entire sort of thing with that last video where you essentially broke down the whole bond market and how corporations use it as collateral. If they start looking at, say, government issued bonds as, very shitty collateral, do you think
Yeah,
they could sort of just gravitate towards, sort of stable coins? Because at one point you look at your
that's a
collateral
good
and you're
point.
like, this is really bad quality collateral,
Especially
right? So
if
there's
you
so many ways
consider
that they could, yeah.
this calculation thingy that I posted you guys in terms of what could happen to their collateral if their if they have bonds at a low interest rate and then interest rates spike in the market, their bonds are going to get devalued really fast, really fast. So they don't trust the collateral anymore, right? It's a little bit more nuanced than that, Krisha, because the way collateral is calculated, it's not just based on the face value of the collateral. So, for example, there's a factor. It's a risk adjusted collateral weighting, if you understand what I mean. So, for example, let's say the banks or whoever, the party in concern with the collateral says, you know what, I think Bitcoin is really risky. I will accept it as collateral, but I'll give it only 35% of its face value as collateral. So for every $100,000 of Bitcoin that you put up as collateral, I will accept only $35,000 of that as real collateral. Get it?
Yeah.
Does that make sense? But if you put in $100,000 of US Treasuries as collateral, I'll accept $100,000 worth of it as collateral. So Bitcoin over time, as it starts gaining more and more popularity, not just Bitcoin, but USD, for example, USDT and USDC. So, for example, a good example would be USDT versus USDC. USDT would be trusted less just because of reputation. And this answers Sherwin's question too. Just because of reputation, USDT will be trusted less than USDC, right? In terms of collateral. That's why you have better interest rates on USDT, because there's more risk that you're taking on USDT versus USDC. Similarly, at the moment, Bitcoin is considered pristine collateral by a lot of big thinkers, but central banks have not reached that, or rather banks have not reached that position yet. When we start having even one major G7 country accept, or rather hold Bitcoin in their treasury, that may turn around.
All right, Sean, we've reached the wow, it's over the 2 hour mark. I say we give them just a couple of levels on some of the charts, and then we can wrap this baby up. This was a really good conversation we had today. This is what's important ultimately.
Yeah.
Money flow in a bear market, that too. I mean, we're seeing this reflect in all the markets across the board, right? SPY included. So, question is, how low can Bitcoin go? Well, I mean, you guys know the levels from the beginning, right? So we're still, I think the monthly and stuff, it's still looking relatively decent until we lose the structure. And structure is only lost, honestly, Bitcoin only goes lower if we lose 28.5K. 28.5K, yes, then we can all expect 20K and 19K and 20 and 14K too is on the books. I know some people are talking about 14K. That would be blood. Some serious blood at that too. But until we actually break that 28.5K region. And as far as Mango's concerned, I already have bids in at around what's
I'm
this? I
gonna
have 35. Yeah,
I'm
go
going to
on.
interject over there a tad bit, because I do want to, because I just looked at the notes of the topics that I did want to cover. I keep forgetting to cover this every freaking stream. But those of you who have been watching Mango for a while now, I mentioned it to you guys a few months ago. I'm not sure if you're here, Ashok, because I'm pretty sure Ashok remembers, but Julian, Philippe, all of you, Sherwin, there was a time where we were looking at the gold to Bitcoin ratio, and that was our massive edge to catching the Bitcoin rally from around $10,000 all the way to, well, $50,000, right? We got bullish primarily on that chart, this chart over here, guys, on the right hand side. Gold to Bitcoin ratio inverted essentially gave us how Bitcoin was performing against gold, and we said, okay, that's going to be the big edge for us moving towards the upside. Now, most recently, like in terms of monthly time frames, I think it was 4 months ago, I said, okay guys, it's time to start looking at a new chart, and we start looking at the treasuries, or rather the bond market compared to Bitcoin. And it's a really apt way to end off the stream, because we've been talking about the bond market essentially all of the stream, right? So I haven't talked about this in a while. I haven't showed the chart to you guys in a while, but it's been on my radar personally. I don't want to spoon feed things to you either, but we are looking at the monthly time frames recently, and I think this is a good time, especially the stream, to go ahead and give you guys an update on what's going on over here. And I want to switch on over to the weekly, start with the weekly over here, show you guys that on Bitcoin, on the actual, let me just remove the cloud. On Bitcoin's weekly chart, Krisha, we have lost the key, correct?
Yeah.
But if you switch on over to Bitcoin against the treasury market, you're going to see something really interesting over here. You're going to see that we've been holding that C-span trade, the Kijun trade against the treasury market almost to the T. Now, we wanted to know whether or not this would actually see play through. And when you look at the treasury market, or rather look at Bitcoin against the treasury market, you are seeing some serious confluence. Krisha, I'm not sure whether you're looking at my chart over here on live stream, but I think you're going to appreciate this more, because we've never really broken the high, and I talked about this like 3 to 4 months ago, where like maybe this is a chart to start looking at. Of course, we weren't sure, right? We're not gurus here, we're not oracles, but now I'm beginning to get more and more confirmation. I'm getting more and more confidence in that maybe this is a chart that we may want to start using as edge, right? We defended it over here too, right? Defended the Kijun to the T, bounced off it, and went to the top of the range, perfectly to the top of the range against the bond market, Krisha, against TLT. And by the way, TLT, this is exactly the ticker that Rahul is talking about over here, right? Switch over to the tab. He says, just use TLT, right? Oops, right over here. Just use TLT. And when he said that, I smiled, because it just goes to show you that people don't tell you what they actually, all of these guys are playing on charts that they're not showing you, right? They're not showing you. Of course, why would they show you their edge? And it's no coincidence that we literally wicked off this to the T. And then again, even though Bitcoin actually made a high against USD, against the TLT market, we did not. In fact, we rejected against it to the T. Even the high, Krisha, even the high is to the T. Look at that.
That was insane. Like, when I think you showed it to me a couple of weeks ago, and when I saw the high, I'm like, damn it.
Right?
Yeah, maybe.
The thing is,
yeah,
at the
this time around,
time,
maybe the
we
bond
did not
market.
have confirmation. We didn't have enough information to actually trade it, right? We have to trade. I'm especially conservative like that, where I wanna be wrong first, and then I'm like, okay, you know what? I'll switch up things, or I'll look at things differently. And now look at this. Like 3 weeks now, we've been holding this. The bond markets are beginning to stutter around the same, or rather, look to catch a bid, right, around the same time. So this will be something that you guys may want to keep an eye on.
Imagine it just bounces from here and you have everything sort of marked out, and then we come back to this in like a week and we see like a nice big green candle.
Yeah, I mean, how many times has that happened and no one really remembers? I mean, like the Cardano trade, I talked about it for
remember.
months. Yeah. Like,
But this one, I mean, look at the signatures on this have actually been pretty neat so far, right? Look for
yeah, to the T.
This is cool stuff, guys. And okay, so my question is, so just one last thing. Gold is also rallying. Do you think gold and Bitcoin can move in unison?
Yeah, I think so. Why not? Why not?
Right?
That's the thing. I stopped looking at gold compared to Bitcoin like months ago, right? We just, I don't think that's the chart to be looking at anymore. I think gold and Bitcoin could go up for the same reasons right now. Like, I mean, gold still has a lot of work to do, Krisha.
It's very close to a breakout though. There, like that would be
yeah,
that would be the first sort of move. That'd be like a catalyst of sorts, right?
Yeah, and I'm sure.
I mean, look at how well it's been following that. Sean doesn't like diagonals as much as I do. He's not a diagonal player. I just freaking smack a horizontal then. I mean, it's still looking relatively good. I didn't expect, finally, gold is showing some strength.
Just smack a horizontal. This is
Voila. Okay, no, but horizontals are better. Like, if you want to really play off of proper regions, then smack,
yeah, but where do I smack
horizontals are
it,
the way to
huh?
go.
Huh, pattern queen? Where do I smack it?
On the last local high.
So that's at 1800. That's a lot. That's a lot of work to do. I mean, okay, I'm not saying it's not going to break it. It's consolidated. It's likely, from the looks of it, it wants to, but until it does, I think. Oh, are you talking about this local high? I'm looking at the daily. What time frame are you looking at?
I'm looking at the daily too. I'm looking at the last time price touched the diagonal.
Okay, the highs I'm looking at are at 1959, 1938, 1906, 1870. So that's the local high that I'll be looking at.
I think gold is coiling here. If it breaks, we'll give you guys an update when gold breaks. Possibly, if it breaks leading up to maybe the next live stream, we can definitely pull it up then. But I like the chart that Sean pulled up. Bitcoin against bonds.
Yeah, you guys should also make sure that you're using the dashboard to your advantage. Try not to trade against it. Try to use your trading strategy depending on whether you're trading the low time frames, the mid time frames, etc. Use the edge that you're getting on the dashboard. Use the edge, right? It doesn't need to be in line with your thesis. Like, sometimes the dashboard is not in line with my thesis, but at the very least it will give you edge. Start with the high time frames and go downwards is what I recommend, and that way you know what the high time frame trend is. So for example, Bitcoin is short on the high time frames. 45 days now, right? Bitcoin has been short. It's given you a 17% return. Many of you guys might be scoffing at it, especially since you have your long Luna trades giving you 65% returns. But again, that's a different topic. Now, if Bitcoin is short on the higher time frames, but on the 4 time frames it is neutral, what does that tell you? Ask yourself those questions. We've done videos on this. On the 12-hour time frame, what is Bitcoin doing? It is short on the 12-hour time frame. On the daily time frame, it is short. On the 2-day time frame, it is short. On the 4-day time frame, it is short. On the weekly, it is short. So what's it saying? That maybe on the 4-hour time frames we have some consolidation going on over here that may lead to some upward pressure. But is that enough for you to take a long trade when all the time frames are going against you? Maybe not a leverage trade at the very least. I wouldn't take a leverage trade on that. That'd be me counter trading almost every trend, not unless I had a good enough thesis. And again, a lot of people are saying that this was like the last time Bitcoin was at 30K. Yes, the price action is very, 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 very similar, but macro backdrop is not. And even though we may bounce from over here, I personally do not want to be putting on a leverage trade over here. If Bitcoin wants to bounce, it will have to bounce without me in a leverage trade. I'm happy with that because considering the risk factors coming in from the macro scene, Bitcoin going up, I'm already in Bitcoin spot, so I'm happy with that. I'm making money. I don't need to be making money on every single move towards the upside, not with your leverage at the very least, right? So I'm going to wait before I get any trades. In the meantime, I'm just following my strategy, and as long as Bitcoin makes a move before 28th of Feb, I'll be pretty happy. So yeah, I hope you guys enjoy the stream. My name is Sean Dexter. Krisha, any final thoughts? Krisha, you're muted, by the way. Can't hear you. You're muted.
Oh, sorry. For those of you looking for altcoins, well, I'll be covering altcoins tomorrow, so we leave that for tomorrow. But other than that, no final thoughts. I think we fleshed out quite a bit today. This was fun, guys. For those of you who stayed, hurrah!
Yeah, hit the subscribe button if you haven't
guys.
yet, and tell your friends about Mango. Tell them that there is a crypto channel out there that actually talks about something other than just moon boy shit.
Mango's gonna be here. This
You're
is
probably
the channel that's gonna
noticing
keep
every crypto channel that had any integrity whatsoever start dropping off or start like losing their integrity, because that's what YouTube is rewarding.
Rewarding. Yeah.
Yeah. We'll try to stick around as long as possible.
Let's go and get this boy a pizza.
I'm hungry. Yeah, let's go.
We have recommendations. So, pineapple on your pizza, Sean?
No, what? Blasphemy.
See that, guys? All right, thank you so much for tuning in, everyone. I hope you guys have an amazing day. If it's morning there, well, have yourself a great rest of the day. And yeah, we'll catch you, well, tomorrow.
Cheers, guys.
I'll catch you tomorrow. See you guys.
Until then, do the mango way, do the easy way, do the stress-free way. Ciao. Stream end.
Ciao, you guys.